Good morning, everyone, and thank you for joining us this morning for the first of this three-part webinar. It's interesting the original ideas behind this week's activities came many months back, focused on how geopolitical risk events or black swan events can impact on trade, investment and supply chains. So clearly very topical based on the situation we all find ourselves in. Without further ado, I'm delighted to introduce Elizabeth Stevens as the presenter of this week's webinar. Elizabeth is an investment and country risk advisor and managing director of Geopolitical Risk Advisory, a geopolitical technology company which she founded after 10 years as head of credit and political risk advisory at JLT Specialty. Elizabeth, welcome.
Thank you, Jeff, and good morning, everyone. Thank you for joining us today. As just said, when we originally conceived of this course, and it was going to be a face-to-face course, we were going to look at all aspects of geopolitical risk. As a result of COVID-19, it's now morphed into a webinar run over three parts. Now today, we are starting with country, political and sovereign risk. On Wednesday morning, we will look at international geopolitical risk landscape and what COVID-19 means for international politics. So, crises reveal fragilities, and this crisis is greater in scope and depth. Debt, as we're hearing all the time now, causes fragility. Since the global financial crisis of 2008, indebtedness has continued to rise. As you can see from the infographic on the screen, international debt is huge. United States, the world's first or second largest economy, depending how we count it, has tremendous amount of debt, which has increased exponentially since the financial crisis. We have China to the right with a considerable amount of debt, Japan, the world's third largest economy, struggling under a heavy debt burden, and beneath them we have Italy, Germany, France, and the United Kingdom. So all world's largest economies now have a tremendous amount of debt on their balance sheets, and a number of emerging market economies are struggling likewise. Now, the indebtedness of non-financial companies rose by 13 percentage points between September 2008 and December 2019 relative to global output, whilst the indebtedness of governments, which assumed most of the post-financial burden, rose by 30 percentage points in the same time frame. Oxford Economics shows that total public debt and private debt soared to 165% of annual output in 2019. Now that's an increase from roughly 70% in 2007. Now, as a result of government support mechanisms in response to the coronavirus pandemic, the transfer of debt to governments will now happen again, potentially on a much larger scale than we saw during the financial crisis of 2008. So this is an unprecedented scale. Now, compounding this picture, the IMF has predicted a potential loss of $9 trillion in global gross domestic product as a direct result of the pandemic this year and next. Now, to provide some context to that, $9 trillion in global GDP is larger than the economies of Germany and Japan combined, two of the very largest economies in the world. So we're living through unprecedented times in a whole variety of ways, but particularly in terms of global debt. So what does this mean for the risk profile of countries, both emerging and developed markets, in political and economic terms? And how will this impact sovereign and corporate risk as we go forward? So the pandemic. Well, the coronavirus pandemic is a shock to both demand and supply, which contributes to some of its unique characteristics. As such, it is doubly severe in its implications for those economies affected. The extent of the impact will vary greatly depending upon the structure of each economy, the extent of the spread of the disease, and the policy responses of the governing authorities and of international institutions. The physical impact and the consequent hit to liquidity and supply chains compound the effect. So what shape will the recovery be? Almost let's begin at the end before we move back to the beginning. We hear a lot of talk about the potential shape of the recovery when we emerge from lockdown. Now, conventional wisdom coming from governments and some economists is that if the entire lockdown is limited to a period of less than 3 months, the recovery should be broadly V-shaped, a rapid and fast recovery, straight down as occurred during lockdown in March, April and into May this year, and then a steep upward curve once lockdown is lifted. Now, if the duration is up to 6 months, a more U-shaped recovery is likely. Now, this is because the impact of a lockdown increases more than proportionally with each additional month the economy is closed. Now, if we take a realistic view of this, in view of the tens of millions of job losses that are beginning to occur and that will follow the end of lockdown, and the fact that governments, however much they might want to, particularly Donald Trump in the United States, to order people to go out and spend and consume again, it's unlikely people will do that immediately. Therefore, rather than a V-shaped, I think we really should expect something a bit like a W, an up and a down, or a jagged U. I think the V-shape, unfortunately, is slightly too optimistic. Now, the worst case scenario is an L-shaped recovery, bottom right of the slide, which was the outcome post the global financial crisis of 2008. Now, if we cast our minds back, we may remember that V and U-shaped recoveries were confidently forecast by governments and central bankers at this time, and economists, yet over a decade later, growth rates have not come close to the pre-crisis level. Now, the reason for the L-shaped recovery after the financial crisis was partly attributable to the distorting effects of quantitative easing on normal market functions, but it may also indicate for many advanced economies a sustained period of anemic growth, as Japan has experienced for the past 3 decades. Now, in advanced economies, the problem of the pandemic and the economic consequences are occurring against the backdrop of interest rates at historically very low levels, and they've been at very low levels for almost a decade now, and unprecedentedly loose monetary policy. Think of all the ways stimulus and quantitative easing we've experienced in the last decade. So to that extent, monetary space is limited, but central banks do have the means of monetary creation at their disposal. Also, after a decade of austerity in advanced economies, they do have more fiscal space in which to maneuver, but government appetite to use it is limited, and this is particularly limited in the Eurozone. Now, in emerging markets, the pandemic follows a year of mass protests in many countries. Look at Algeria, Lebanon, Chile, quite different countries in many respects, but the protests had a common theme against lack of economic opportunities, poverty, and corruption and unrepresentative governments. Now, these protests generated economic uncertainty. They triggered market sell-offs and widened capital spreads in the countries affected. So in these countries, monetary space is also limited. And these countries also have historically low interest rates. So any meaningful stimulus package could spark substantial capital outflows, increasing the risk of capital controls and potentially leading to currency depreciation, inflation, and the rising cost of capital. So the pandemic in emerging economies exacerbates the risk that governments looking to make fiscal adjustments, such as an expansion of the tax base, could suffer a social and political backlash. You know, the newly created middle class was promised prosperity even before the pandemic, and governments were failing to deliver it. So whilst during the lockdown and the height of the pandemic, the number of protests in countries around the world has been significantly curtailed, particularly in the emerging markets, there is every possibility that once lockdown eases, once the worst effects of the health issues surrounding the pandemic ease, that if governments aren't seen to have acted efficiently and effectively in managing the health and economic impacts of the pandemic, that we could see a resumption in protests. Now, while the medium to long-term consequences of massive government intervention in the economy is unclear, it has proved necessary to prevent large-scale corporate bankruptcy, unemployment, and the permanent loss of productive capacity. See, the whole rationale behind the furlough scheme in the UK and other European countries and various schemes in the US and Japan has been to keep people in work, or to keep the potential of those jobs open, to encourage companies to plan for post-pandemic to keep productive activities going, rather than seeing a significant hiatus and lost productivity in the economy. So in effect, government intervention has theoretically saved capitalism as we know it. For now, at least. If we have a second or even third wave of the pandemic, we're unclear what approach the government will take to that in economic terms. But for now, at least, this tremendous intervention by governments, particularly in advanced economies, is maintaining the edifice of the capitalist system. Now, the impact of the coronavirus will not be equal for all countries. Very obvious to say, but incredibly important. But it's very difficult to determine which countries are the most vulnerable and which, if any, will emerge from this crisis relatively unscathed or the least unscathed. Which countries will become the lower risk for investment destinations, which will become the higher risk, and how do we determine between the risk profile of countries? Many of the metrics by which we as analysts have quantified or qualified country, political and sovereign risk have changed in a relatively short period of time in response to the pandemic, because of the different ways that governments have responded to this, some obviously more effectively than others. So when we say which countries will become the lowest and highest risk, well, in terms of the vulnerability of some countries, sadly, the usual suspects are most at risk, those going into this crisis with the weakest balance sheets and the highest levels of debt. So countries with high external debt and low external reserves are particularly vulnerable. So if we look at the list here, and I've put down suggestions for countries and regions that may be affected in this way. You may obviously have your own thoughts around this, which we can discuss later on. So perhaps the leading country with high external debt and low external reserves is Argentina. I mean, Argentina in 2000-2001 registered the largest sovereign credit default in history, when it defaulted on $100 billion of international debt. I mean, fast forward to 2017, 18, 19, Argentina was permitted to re-access the international capital markets. It had one of the largest debt issuances in history for an emerging market. The IMF gave it its largest bailout in history of $57 billion. And now in 2020, we're in the situation where Argentina is defaulting on its sovereign debt again, trying to renegotiate debt repayment terms with its creditors. It's citing the coronavirus as the reasons for these issues. I think as every economist will tell you, the underlying issues were there prior to coronavirus. So I say that's the highest risk country on the list. Ecuador is suffering significantly, to Egypt as well, and Venezuela. Obviously, with Venezuela coming into this crisis, it was teetering on the brink of being a failed state. Some would say it had already passed the brink there. With the incredibly low price of oil we're seeing at the moment, Venezuela's finances are in complete disarray. And here I said much of sub-Saharan Africa is in this situation. There are obviously exceptions to the rule, but many countries in sub-Saharan Africa have high external debt, low external reserve. There's a move at the moment, obviously, for advanced economies to practice debt forgiveness or delay demands for repayments, which may give some respite to a number of these countries. And then countries with high public debt and low reserves. Again, it's suggestions rather than being a completely exhaustive list. But Brazil is topping the list. I mean, that had significant economic problems going into the crisis. Much of Central East Europe, Egypt again, Italy, Jordan, Nigeria, Pakistan, and Turkey. So the usual countries who suffer with the high public debt, which is being exacerbated by the pandemic at the present time. And this also gives governments limited fiscal space to maneuver and to offer bailouts during this crisis. If we look at the list here, governments have been very limited in what they've been able to do to support individuals and businesses during the crisis. Now, commodity and tourism dependent economies. Being realistic, almost every country in the world could have featured on this list in terms of those that are dependent particularly on tourism revenues. Much of Europe, UK included, is dependent on the tourist season. I mean, Greece could easily have been on this list. It's planning to reopen beaches and holiday resorts in July, probably at 50% occupancy due to social distancing. And without a flourishing tourist season, its GDP will be hit by anything from between 6 and 10%. So on this list, we look at Bangladesh to begin with. Very heavily dependent on commodity exports, generally in terms of cottons and textiles. Brazil, obviously we have the oil sector there, and Croatia, very heavily dependent on the tourist sector. I mean, people in Croatia are staying at home, following government guidelines assiduously in the hope that the economy will reopen very quickly, because the government doesn't have any latitude in supporting those who are not working at present. And obviously the Caribbean, majority of Caribbean countries are heavily dependent on tourist revenues, and with flights from the UK and other European destinations and the US being curtailed, even though that most of those islands haven't been significantly hit directly by outbreaks of the virus, their tourism trade for this year has been decimated, and quite a number of those resorts have been closed. And there's a resort I've been to in St. Lucia several times, and I actually received an email saying the resort had closed because BA had terminated flights to St. Lucia, and was I willing to make a donation to support staff while they weren't working. And I'm sure that isn't limited to that one particular location. And then as we go down the list, obviously Kazakhstan in terms of natural resources, Oman from the holiday trade, and then we get into the bottom, much of Latin America, Sub-Saharan Africa, and oil producing Gulf states. The entire world is obviously suffering in various ways as a result of the curtailment of economic activity and international trade. Now, countries with a weak health system or weak government have been hit very seriously by this pandemic, and Italy and Spain in Europe top the list. I'll mention Greece again. I will be honest, I was quite surprised that Greece didn't appear on this list, but the Greece government worked very quickly to impose a lockdown. I think it was 13 days after their first coronavirus case, and they've kept deaths in the country to about 150. They performed very well in that regard, which contrasts to some of action taken by the Greek governments in the past decade. They've worked very effectively. In contrast to Italy and Spain, the lack of central planning and weak health systems has come to the fore in this crisis, and their health systems, particularly in Italy, have been overrun by the number of people seeking hospital care as a result of the virus. The US, well, kind of disappointing to see the world's largest or second largest economy on the list, but the federal system of government has obviously undermined efforts to contain the virus. So has the current style of presidential leadership as well. And the health system that's based around insurance payments has proved slightly inadequate to manage the crisis. And many emerging markets as well have obviously suffered with the lack of medical equipment, doctors and infrastructure. I might just mention the UK on this list as well. The health system, the NHS, has stood up admirably well considering its underfunding, but I think the message "protect the NHS" has had a knock-on effect and raised deaths in other areas, be it care homes or increasing deaths of people who die at home. So government messaging can actually have unintended consequences as well. So what actually does determine the scale of the impact by country? Well, let's just consider this for a moment. The variability in deaths per million between countries that many would have expected to have similar outcomes, I think, is astonishing. Now, this disparity is a reflection of resilience, and it will also shape how investors assess the risks associated with doing business in these countries for the foreseeable future. In my view, the UK, in terms of its poor handling of this crisis, and the US has lost a tremendous amount of its soft power. I mean, would you really now copy the British or UK, US models? I think we've lost our opportunity to lead by example. So what accounts for the differences in the experiences of countries around the world who on the surface would have been expected to have relatively similar outcomes? So first point, I think, is age structure of the population and density of the population. Now, one reason for the high death rates in Italy and Spain is the population has an older age structure. In those countries, particularly in Italy, a number of generations from a family live together in the same household, and that is thought as being one of the reasons why so many of elderly people in Italy contracted the virus, that they caught it from younger members of the family who live in the same household. And population density is also key. It isn't a surprise that about 23% of the deaths recorded in the US and in the UK are attributable to New York and London. You have large populations working closely together, traveling closely together, and living very closely together. So density of population is key. As we mentioned previously, quality of health service and health service type is crucially important. A well-funded, free at the point of delivery health service should be able to deal more effectively with the medical impact of the pandemic, limiting the spread of the virus and the loss of life. I mean, the US pay-on-demand system has prevented many from seeking medical assistance and proved ineffective in responding to the pandemic, whereas the health systems across Scandinavia and in Germany have performed more efficiently. The degree of fiscal support available has varied widely between countries as well. And the degree of fiscal support available to ensure individuals, corporates, and local governments survive the immediate lockdown is crucial. And it increases the likelihood that an entity you trade with or corporate you own shares in will receive the financial backing it requires to survive the crisis. I mean, some could say, well, it's kicking the inevitable can down the road, but at the moment, this government support is incredibly important, crucial for economic stability. Now, some countries have been in a better position than others to deliver that. Singapore has been far better placed to deliver financial support than grant-reliant Bahrain, for example, which isn't giving any support to companies or individuals within the country. Neither is Oman. They're too cash-strapped to be able to do that. Similarly, Croatia lacks the resources to provide financial support, while the UK and Germany have allocated billions of dollars to the cause. In the UK, the furlough scheme, we currently have 7.3 million people on sort of the government's books, is costing about 14 billion a month. So that scheme was initially in place for 3 months. It's now being tapered and running until the end of October. But there is potential in the UK for the national debt, just with the furlough scheme alone, to increase by 80 billion, if not more. The structure of the economy and structure of trade is key as well. The more diversified an economy, the less vulnerable a country is. As we saw on the previous slide, those who are heavily dependent on commodity exports or tourism have been very seriously hit by the pandemic. So Germany's capital goods dominated economy may in the medium term be harder hit than the UK's more mixed economy. Those with a large number of small businesses are potentially more vulnerable, as smaller companies tend to be less resilient than larger organisations. However, in the UK, the government has tried very hard to support very small businesses and micro businesses. And I would say in the emerging world, where you have the small little family businesses, where all members of the family work together in a particular area, they have greater resilience than smaller businesses that employ people outside the family to work for them. But I would say overall, those countries who are highly dependent on small businesses and perhaps medium-sized enterprises will be more severely hit, and we'll see many thousands of those businesses fold in the months to come. Structure of trade is important as well. Prior to the pandemic, it may have been thought that oil producing nations would be well placed to withstand a crisis, as oil is usually considered, crucial to survival. Ironically, as a result of the global shutdown, oil has been relegated from the crucial to survival category to actually something we don't need to the extent that we did 2 months ago. And I believe demand for oil has fallen from between 15 and 20% across the board. So plummeting demand has pushed prices into negative territory, and the economies of oil producers are beginning to creak, particularly your Venezuelas and Nigerias, which don't have the economic buffers to weather the storm perhaps as effectively as the UAE or Saudi. Equally, commodity-dependent countries such as Zambia or Chile are being adversely impacted given the scale of industrial shutdowns globally. Also affected are those that export items sold in non-essential retail outlets that are in lockdown. I'm sure we've all gone online and bought various items of clothing, but probably not to the same extent as we would do were we able to go to a shopping mall. So countries like Bangladesh and India have seen their textile exports plummet. Also, remittance-dependent economies have been seriously impacted by the lockdown. As countries have closed borders, some have sent migrant workers back home, some have locked them within the borders of the country where they were working, but they've been unable to continue working. So remittance flows have been severely curtailed by the closing of economies and borders. And Central Asian states have been adversely affected by the economic contraction in Russia and the closing of borders there, just as one example. Now, effectiveness of government. What I found fascinating throughout this crisis is that the system of government has not proved the decisive factor in the determining of the government response and the effectiveness of the response to the crisis. I mean, the weakness of the Chinese system was made apparent in the early handling of the crisis. As news of the virus was spread, the doctors who highlighted this new virus were persecuted, and officials in Wuhan didn't want to tell the true story of the spread of the virus to officials in Beijing. But then China turned this around, and the trappings of authoritarianism proved very effective in being able to launch a nationwide shutdown in a short period of time, and to be able to effectively maintain that. At the other end of the spectrum, we have the UK and the US have definitely been lacking. The UK due to political and bureaucratic ineptitude, and the US because of the federal versus state organisation, exacerbated by President Trump's poor messaging and handling of the situation. I think notably the UK and the US are both led by individuals who dislike receiving and delivering bad news. Both delayed delivering the bad news that their countries would need to go into lockdown, and perhaps the extent of the severity of the pandemic. Broadly speaking, populist strongmen like Trump, Bolsonaro, Erdogan have performed least effectively, placing denial before concrete action. And this contrasts with the effective responses of New Zealand, Norway, Denmark, Finland, Germany, and Austria. Now, I was debating whether to include Sweden in that list. Obviously, Sweden is an interesting country to consider because it hasn't gone into lockdown as the rest of Europe has. It's too early to tell perhaps what impact that will actually have. The death rate in Sweden is higher than in neighbouring countries, but it will be fascinating to see over the next few months whether the economic impact is as severe, and or whether the population in Sweden have developed a high level of herd immunity because more of them have potentially been exposed to the virus. Previous experience counts for a tremendous amount with how many countries have dealt with this pandemic. Taiwan and South Korea have handled this exceptionally well. They've both had a particularly low death rate per million because they had a pre-existing system for pandemic responses in place. Much of Asia had been affected by SARS, MERS, and avian flu, and they had protective clothing supplies, easy testing equipment, and laboratory capacity to process the tests were already in place. And it was all fully functioning before the coronavirus outbreak. In the West, we hadn't had such negative experiences with contagious diseases in recent history, and we don't have that infrastructure in place. However, some countries like Germany stepped up to the mark and had the infrastructure in place quite quickly. I think what was disappointing was how pandemic supplies in the UK and the US in particular were lacking. They had insufficient protective clothing, insufficient masks, they didn't have the ventilators, they didn't have the gowns, which actually is inexcusable in a developed country. But previous experience and handling of a pandemic has counted for a tremendous amount in this crisis. And then last on the list, and the list could have been much longer, I have included migrant communities. Some countries perform well in handling the virus, such as Singapore, but then they had second waves of infections in their migrant communities. These communities tend to live in densely populated areas. They're not integrated into society. They live in poorer conditions, and that's a breeding ground for the spread of pandemics. And obviously there's also concern that there may have been more outbreaks in the migrant camps in Greece, and obviously this is a real concern in migrant camps in Syria and refugee camps in Lebanon and Jordan. So migrant communities, those who aren't fully integrated into society, pose a risk as well. So who had the most effective response mechanism? We have touched on this. My list would be Austria, potentially Australia as well, Denmark, Finland, Germany, New Zealand, Norway, South Korea, and Taiwan. I think that increases their soft power, their ability to lead by example, particularly perhaps Germany, given the size of the economy. And theoretically, their economy should rebound more quickly when lockdowns are lifted and should we ever go back to business as normal. So what are the transmission mechanisms of sovereign strain? Well, the coronavirus is a significant shock to both demand and supply. Global output will continue to suffer as a consequence, with the impact more severe the longer the lockdown and disruption lasts, and particularly if we see second wave pandemics in the autumn. The strain on public finances will add to both government spending and borrowing, while the loss of output will damage tax revenues. For those countries with a welfare safety net, costs will balloon, compounding the fiscal strains. Now, the collapse in global trade means that external balances will also deteriorate, especially where exports are of discretionary items, but also for intermediate goods hit by the disruption to supply chains. As a consequence, the metrics of risk ratings are high on both the numerator and denominator. This implies the ratings downgrades will be significant and plentiful. Now, this slide showing sovereign downgrades to date isn't complete or exhaustive. It was to show a few examples. And I think to a certain extent, the rating agencies have perhaps been overly harsh on Africa with their downgrades. Russia and Saudi, I believe, still remain sort of untouched. And Mexico, while it has been downgraded, I think the agencies were quite benign, because I think its economy is perhaps in a more parlous state than the rating indicates. But a number of emerging markets have already been impacted by sovereign downgrades, and the scale of the economic shock would indicate that an increasing number of sovereign ratings will fall over the coming months. As we can see here, the reasons for the downgrades do relate to the coronavirus, but obviously a number of these countries had weak balance sheets going into the crisis. So with Angola, it's obviously the weak oil price. Botswana, depressed diamond market. Cameroon, weak oil price and supply chain disruptions, and obviously the countries beset by socio-political tensions with conflict between the Francophile and Anglophile regions of the country. Gabon and Nigeria, it's the weak oil prices. And South Africa and Mexico, I mean, South Africa has now been downgraded to junk by all the ratings agencies. It's existing economic weakness and debt burdens, which are then compounded by the impact of the coronavirus. And Aruba and Mauritius have been downgraded because lowest tourist arrivals means lower tourist receipts, which will have a significant impact on GDP. And in terms of particularly tourist traffic, that list could be more exhaustive. What I am interested to discuss, though, and I'm sure you will have a view on this, is whether there is potentially an argument to say that as high public debt burdens, particularly in advanced economies, will be the new norm for almost every economy, and particularly the largest economies in the world, whether pressure will be exerted by governments for rating agencies to recalibrate their ratings to reflect this new reality, i.e. rather than having a wave of downgrades, will the rating agencies redefine the boundaries of the ratings? I was considering this in the context of the furor in August 2011, when Standard & Poor's stripped the US of its coveted AAA rating. The rating was downgraded by 1 notch to AA+ on concerns about the government's budget deficit and rising debt burden. When we could always smile when we consider that. Now, if you think how much higher the government's budget deficit and debt burden is. So in the intervening 9 years, the debt burden has spiraled further, implying a downgrade by the other agencies should be expected in the coming months. And what implications will that have for the dollar as the reserve currency? Downgrades also raise questions of parity between ratings as well. If rating agencies downgrade country X, is its rating still in parity with country Y? Cast your mind back to the height of Japan's economic crisis. Its sovereign credit rating was repeatedly downgraded by all the rating agencies until it ended up on the same level of Botswana. Now, this was a nonsensical rating when Japan at that time remained the world's second largest economy. And sovereign ratings won't be the only casualty. Corporate ratings will also be cut. Many corporates will fail and others will see their rated debt lose investment grade status, with the implications this will have for borrowing costs and the exclusion of potential investors like pension funds. Going into the pandemic, a record number of corporates were already at speculative grade. 30% of corporates in the US are rated B- or lower, and 20% in Europe. These rising levels indicate a particular vulnerability to changes in business conditions. I mean, consider car maker Ford in the US has been downgraded to junk, and so has Pemex, Mexico state oil company, has also been downgraded to junk. S&P forecast defaults rates to increase to 10% in the US and to high single digits in Europe. And as of 1st of April, S&P had downgraded 330 sovereigns and corporates globally and placed another 350 on negative outlook or credit watch. More than half of those are in the US, reflecting the size of the US market. So downgrades and defaults will have a knock-on effect on national output and tax revenues. Higher borrowing costs may bring about second-round credit strains as debt servicing becomes more challenging, potentially threatening the viability of the borrower, be it a sovereign or a corporate. This is particularly true in emerging markets where exchange rate collapses worsen the solvency of domestic borrowers, notably businesses with debts denominated in foreign currency. In the banking sector, while banks were well capitalized going into the crisis, government policy, I think, is exacerbating the risk there because the government is pushing banks to lend to uncreditworthy companies and not to impose penalties where covenants are breached. These policies could, if they continue, adversely affect the stability of the banking sector, and that will have adverse consequences for the financial system in its entirety. And it is notable that alternative forms of financing are under strain, and private equity companies and investors have been quick to request government aid. So just before we wrap up, let's look at currency winners and losers in the crisis. While the dollar and Japanese yen have benefited from the initial rise in volatility, I think once the health crisis subsides, the Norwegian kroner, the Australian dollar, and the New Zealand dollar look quite promising. All three countries have low levels of government debt, and this gives them more room for fiscal stimulus to continue to shore up their economies and policies post-pandemic. And I think that will emerge as a driver of currency movements once the health crisis subsides. The corollary of this is the weakness of sterling and the Canadian dollar. Both governments' fiscal room is limited. And I think in the Eurozone, the euro will come under pressure due to distressed finances in Italy and Spain. So to conclude, it is a perfect storm. And it's challenging to find positives on a large scale. We see small companies, repurposing to meet new demand for hand sanitizer and face masks, but on a large scale, it is difficult to find positives. And these challenges are compounded by a lack of cooperation between Germany and between the US and China, the world's largest economies. What I do think, though, is that new opportunities will emerge for governments looking to stimulate their economies post-pandemic. Investment in infrastructure could be a key driver for growth going forward, and it's something Western Europe, the UK, and the US is in desperate need of. And every crisis gives rise to new opportunities. Disruption to supply chains will create many opportunities, and we will look at that on Wednesday. For now, Jeff, I'm happy to take questions if there are any.
Thanks, Elizabeth. Yeah, for those tuning in, please do use the Q&A function. We've been tracking these as they've been coming in. Hope you're ready for these, Elizabeth. First one here. Will governments in developing countries be able to make the level of bailouts required to cushion the impact of the pandemic on their economies and those companies operating in them? So this is more about, I guess, emerging developing markets and whether they can support in the way that some of the Western countries have.
It's very much country, I would say it's country specific. As part of it will depend on the debt moratoriums that international agencies are prepared to provide, and Western governments and private creditors who own that debt as well. Obviously the US have been reluctant to grant moratoriums and debt repayment holidays. But I actually think private creditors will work effectively with those governments because the losses will actually potentially be too high for them not to do that. But I think sadly in many developing markets, governments aren't going to be able to raise sufficient capital to protect all their industries. But I'd say that's going to be the same in the Western world as well. We're going to see quite a number of sectors and companies fall by the wayside.
Yeah, the next question kind of covers that really, with sovereign debt having been a massive issue in markets like Africa.
Yeah.
In particular, and obviously there was a lot of pressure around the IMF. So how much more serious do you see this getting for the African economies, particularly those that had those large sovereign debt levels?
Sorry, do I see
the question around African markets with huge levels of sovereign debt? Someone's asking here, how do they see that being an issue in terms of they were already stretched before the pandemic, so how can those markets be expected to cope?
With difficulty is the short answer. I think we'll see additional IMF financing to quite a number of those markets. I think we're in the situation now where, and I don't think it's an exaggeration to say, governments across the world are taking action to save the capitalist system as it stands. And I think international institutions, particularly the IMF, with backing from advanced economies, will extend larger financial safety nets to a number of developing economies in Africa. But I actually think, and I don't want to sound overly negative, the sums will not reach the levels genuinely required to provide a completely effective cushion. I think we've got to a point where we can create more money, but the system is so overburdened by debt. At what point do hold that debt, write it off, and just say a lot, this debt is not going to be repaid? I mean, global debt now is almost 300% of global GDP.
The next question here kind of plays a bit to that as well. So you mentioned, with regard, obviously we're here in the UK, talk of the furlough scheme and the different financial support measures. Do schemes like that, are they delaying the inevitable when it comes to things like unemployment? Is there a situation where, even the UK Chancellor and other leaders said the same thing, they can't save every job, they can't save every company? Is there an issue where some of these support measures are delaying the inevitable, and is that potentially damaging in its own right, as you're essentially spending money for companies that are going to go bust anyway, or is that something that you need to do?
It's an interesting question, because, and I think a comparison, say, between the UK and US is insightful around that. So the US government policy has been to give additional money to those people who are unemployed, and US jobless figures have risen far more quickly than they have in the UK or Europe. And I think that's attributable to the way in which financial support is being given. So once you're unemployed, you get the support. The US government isn't giving as much support to businesses to keep people in work. In the UK, it's different. Companies are being paid, in effect, to keep people on the payroll. And yes, to answer your question, I think sadly it is delaying the inevitable. We've got 7.3 million furloughed. If we take out those who work for airlines in the hospitality and leisure sector, we surely must be looking at least 2 million unemployed coming out of this. And I think the reason the government extended the furlough scheme last week was that those companies who were looking to make more than 100 people redundant had to have a 45-day consultation period, and that would have kicked off Friday last week had the furlough scheme not been extended. And to me, that really answers the question. Yes, I think there'll be significant redundancies. And then it becomes a debate whether is the government doing the right thing economically and from a social perspective, postponing the inevitable, or should the companies fold now?
Got an interesting question here. Has any other country copied Sweden's approach? And I guess that means explicitly, because you could argue, I suppose, the UK to a certain degree was for a while, and
just not in such an organised fashion.
Not in such an official way, yeah. But has any other country copied the approach of Sweden?
Not that I'm aware of. I know, well, I believe some of the Caribbean islands, I don't believe, have imposed lockdowns in the same way, because the virus hasn't hit them directly as a health issue. It's been more flights have been curtailed, so it's hit the economy. But even I know Bermuda went into lockdown. So no, I think Sweden's the only example, definitely, of a developed economy that's taken that approach.
And the follow-up to that, the same person asks, is were there any promising signs from that? Could Sweden be deemed as a success, even though clearly certain other parts of the world have been looking a little bit dubiously on it?
I think it depends how you define success, doesn't it? Because their death rate, if we put it in stark terms, is lower than I believe the UK or the US's, and they've remained open. You've had the highest number of infections in Stockholm, which you would expect due to density of population. But if it transpires that the population has developed a certain level of herd immunity, they should be more immune economically and health-wise to a second wave. Economists are now saying, well, their economy is going to contract to the same extent as neighbouring countries, therefore they should have gone into lockdown. But I would have thought actually government debt will be significantly less because they've allowed people to continue going to work. And also, I guess it raises the question, doesn't it, in terms of we've gone into lockdown, the majority of the world, and that protects the most vulnerable sectors of society, which in the developed world tends to be the older population who, from an economic perspective, are probably the least productive. So what social and economic implications does that have going forward? Can you keep shutting the economy every 6 months if there's a second wave and a third wave to protect your elderly population at the expense of the opportunities of younger generations? So Sweden may avoid certain social issues that we may see happening in the UK.
I've got an interesting question here, actually, which is, do you see the parameters for economics being redrawn if every market has huge levels of public debt, as you would expect it to some degree? Things like GDP and trade being more of a measure. The idea that if you've got huge debt, I suppose, if your growth looks strong, that debt will get smaller over time. Did you see a reliance on debt as a metric going down on the basis that pretty much everyone has got huge levels of debt?
Yeah, that was my point about the sovereign ratings. Will the boundaries be recalibrated? Because yes, debt, huge levels of public debt is the new norm, particularly in advanced economies and China as well. So those governments will have an interest in new metrics being used. So to answer the question, yes, I can see the boundaries being redrawn and GDP growth and levels of trade being perhaps more clearer indicators.
And a related question someone's asked is around agencies like Moody's, and they take a 3-year average. I mean, are they going to have to recalibrate how they go about sort of evaluating these things? The question, they sometimes operate in a bit of a vacuum. Do you see huge changes to the way, you touched on it in the presentation, but what's your view in terms of how it's likely to change and what the future could hold for the way they operate?
Well, if we work on the premise that whatever happens with COVID-19, the world, due to its interconnectedness, is going to be more vulnerable to pandemics going forward. We'll also have disruption caused by climate change as well. I mean, ironically, the climate's probably in better shape in the last few weeks than it has been in years. So I think taking a 3-year view will become more challenging when we have events that can disrupt the world, you know, in a 3 or 4 week time frame. So I think that might change. And I think the factors that are taken into consideration to determine country ratings may change as well. I mean, generally, I believe with ratings, I know Fitch, for example, when they assign ratings, democratic countries are assigned a higher rating than, say, non-democratic countries, because the system of government makes a difference to the rating. So a democracy, so the UK would be considered more reliable in repaying its debts perhaps than a non-democratic country. But I wonder if new measures of government effectiveness will be taken into consideration now following this crisis, because the UK and the US, they may be democracies, but they've been highly ineffectual with how they've managed this. So I think there could be quite a number of changes.
Someone was asking about that soft power element as well and how that impacts on global political stability. And you spoke about strongman politics, but I guess you've got different types of strongmen. You've got the sort of Trump-Bolsonaro approach, and then you've got maybe the slightly more nuanced approach. The Chinese, you know, would President Xi be considered a strong man, bearing in mind China's approaches seem to be very different to, say, that of the US? What do you think the risks to global political stability are from the loss of soft power from, say, the US and dare I say also the UK? Actually,
I was going to talk more about this on Friday, but what I think has been a true loss is actually, take Trump out of the equation, is US global leadership. And we saw that after the global financial crisis. We saw that in Obama's actions following the Ebola outbreak. The world actually needs a country or a group of countries to lead in crisis. And we can see that the resort to nationalism and countries competing over face masks and ventilators actually has negative consequences. And China hasn't, yes, it's trying to lead, to step into the vacuum created by the Americans, but more as a PR exercise rather than a genuine, we want to move the world forward. I think the motivation is different. And I think, yeah, soft power leadership is incredibly important and influential. And I think without that, without certain norms and standards that countries are held to, I think the world does become more unstable.
It's probably time for a couple more here. So first one of those two, do you think that the large multilateral corporations, are they doing enough when it comes to things like debt restructuring, debt pardons? What are your thoughts? Have these multilateral bodies stepped up to the plate as one would hope they were designed for?
Considering the pressure on them not to, and the lack of international consensus around their mandates, one could argue they have, in the circumstances, performed well. But given the scale of the pandemic, obviously there's a tremendous amount more that can be done. But I would also say in their defense, it's been 100 years since we've had a global pandemic, and that was in a very different economic era, that individuals and institutions are still unclear on how to manage this pandemic. And it's also a question of how resources should be allocated. So we can look at IMF loans and bailouts, but obviously even the IMF has a limited amount of funds on which it can draw. Think about Argentina, it was loaned 57 billion by the IMF, a tremendous amount of which it will default on. I think international institutions also have a responsibility to consider whether these loans will be repaid as well. There needs to be, let's deal with the current emergency, but there also has to be a medium to long-term plan behind it as well. But when we have Trump, saying he will suspend US payments to the World Health Organization, these institutions are under tremendous pressure. I mean, the UN Security Council has been woefully absent during this crisis, but that's because of, if you think of the veto, there's no way Russia, the US and China would agree on anything at present.
And the final question, I suppose this is an interesting, I think there's probably two parts to this. Countries not affected by the coronavirus. So I suppose any sort of large markets that haven't really seen any impact, and maybe also talking a bit to your slide about the countries that did best and what were the key common factors in that. So maybe there's two parts to that. Could you give us some thoughts?
I don't think there hasn't been a significant economy that's been unaffected by this. And I don't mean this facetiously, but some communities, island communities that rely on fishing and a subsistence agriculture have probably fared better than anyone else in the world at present. So every economy has been affected. I think what will be telling going forward is how effectively they can manage their debt burdens and how quickly they can restart production as well. So we may actually find of the larger economies, it's China that over time is perhaps the least affected. I mean, South Korea and Taiwan have proved quite resilient because of their testing capacity. So they've been more impacted by other disruptions to supply chains and other countries not buying. So I would say those two countries are quite well placed. And Germany, obviously, they've contained and managed the virus quite effectively as well. In terms of which countries did well, those who acted quickly, so New Zealand and Australia in closing their borders, those who had effective and well-organized health systems, so that would be South Korea, Taiwan, Germany, and the Scandinavian countries. And those who had, I think, populations who were willing to follow government guidelines as well and had faith in their institutions. And I think that's been true in New Zealand, Scandinavia, and those countries. And that there isn't a direct correlation there between how free and democratic a country is. It's been about respect for institutions. And also people feeling they have an obligation to follow the rules, which in South Korea and Germany, for example, they do.
thanks to Elizabeth for delivering her presentation and taking the questions. We're sorry if we didn't get around to getting through all of your questions. We're back at 10 a.m. on Wednesday for the next instalment, and maybe we can get back into some of those questions too if they link in, and further chance for interaction. But until then, do take care. We look forward to seeing you on Wednesday at 10 a.m. Thank you. Hello everyone, and welcome back for part 2 of this week's 3-part webinar focused on geopolitical risk in the age of COVID-19. Today's instalment looks at the redrawing of international supply chains, and I'm delighted to be joined once again by Elizabeth Stevens, who I believe has a special guest with her. Elizabeth, over to you.
Thank you for joining us again. Today we will be looking at international supply chain risk, and I'm joined by Christine Shields, who will be giving us her thoughts on how international supply chains have been disrupted as a result of COVID-19. So to give you a brief overview of the agenda, we'll be looking at what the impact of supply chain disruption has exerted on the world economy, what sectors have been most vulnerable to supply chain shocks and which will be vulnerable going forward, and will we see a retreat to domestic manufacturing, production and home working as a result of the significant changes that have come about due to COVID-19. So let's begin by casting our minds back to 2015, when the man you can see on the slide in front of you, Bill Gates, who I'm sure you recognize, the founder of Microsoft and one of the richest men in the world, in a TED talk warned that the world had been incredibly fortunate in stemming the spread of Ebola, and that we were ill prepared to deal with a global pandemic that would surely emerge. Now, Bill Gates was right on both counts, and in a very short period of time. I'm sure when he spoke in 2015, he didn't expect that we would be hit by a global pandemic just 5 short years later. So the global pandemic did emerge in the form of COVID-19, and the world's governments and international institutions were woefully ill prepared to deal with it. The virus originated in Wuhan in China, and as suppliers shut down in Asia, procurement and supply chain managers were immediately confronted with the vulnerability of their global supply chains and the fact that they had limited knowledge of their international supply chain exposure beyond their top tier of suppliers. The disruption encapsulated everything from raw materials to low-value items crucial for production. Businesses simultaneously scrambled to secure alternative forms of supply, and markets experienced a level of turmoil never seen before. Now, while the global pandemic may appear to be a once-in-a-century occurrence, if we put this in the context of the last truly global pandemic, which was Spanish flu after the First World War in 1918, we may be lulled into a false sense of security that we're dealing with this now and we will have a respite for the next 100 years. But that is actually quite unlikely. The reality is that future outbreaks of communicable diseases like COVID-19 are highly likely. Compounding this risk is the disruption to supply chains that will surely result from climate change and growing political instability across the world. Now, truly global supply chains developed after the Cold War and have evolved into worldwide interconnected supply and demand networks with profound interdependencies, comprising vastly complex operations with greater exposure to the vulnerabilities of every country and manufacturer in the process. And sometimes this can be hundreds of, if not thousands, of countries, manufacturers, and suppliers. Now, this is the first occasion these truly global supply chains have experienced this level of disruption, and governments and businesses are scrambling to find a solution. A shortage of intermediates, the important parts and materials to make products by countries that were hit by the virus early on, led to interruptions in the production process of other countries before the virus arrived. The damage will be larger the more a country depends on the supply of intermediate goods from countries whose working population was hit hard by the virus. Now, if we look at the graph, we can see that once the virus spread to Europe and the US, the graph shows that countries like Luxembourg, Ireland, Hungary, the Czech Republic, and Belgium were impacted through the inputs side of their value chains. Currently, 10 out of the 15 countries that are most exposed to shortages of supplies are in Europe. which is a reflection of Europe's high level of connectivity and supply chain connections with the rest of the world. Now, the US is a relatively closed economy and therefore less hit by the lack of supply of foreign intermediate goods. But the economic fallout in the US due to the quick spread of the disease generates significant problems for Canada, which is heavily dependent on supplies from the US, and also it impacts on Mexico, which is dependent on the US market for a large percentage of its exports. If we look at the next graph, we can see that the connectivity of an economy to the countries with the most deaths is especially important if the latter are key suppliers of intermediate products to world markets. The chart shows the 10 largest suppliers of world markets. It shows that 8 out of the 10 largest suppliers are also in the top 10 countries that have been most severely hit by the pandemic. By both measures, Luxembourg, Malta, Ireland, Vietnam, Singapore, and the Czech Republic, Hungary and Slovakia are in the top 10 countries most affected by interruptions in the supply of intermediates of countries hit by the virus. Of the 10 largest economies in the world, Canada stands out once again as one of the most vulnerable. Now, open economies are not only seriously affected by the virus through their imports of intermediates, but also through their export channels. Even after the virus has been brought under control domestically, an open economy will continue to suffer from the virus because of fall in demand in countries that are still struggling with the crisis. This crisis, like never before, has had the most tremendous knock-on effect and continues to do so. If we look at the next graph, we can see that it shows that Luxembourg, Malta, and Ireland are most dependent on foreign demand, mostly driven by the services sector. For Vietnam and Hungary, the manufacturing industry is hit by falling external demand. Of the top 10 largest economies in the world, Germany is most affected through its exports, followed once again by Canada. So let's look at various aspects of supply chain risk, both in terms of sectors and countries, in its broadest form in more detail. Now, to help me do this, I'm joined by Christine Shields. Christine has spent her career working in the city with RBS and then latterly with Standard Chartered Bank and then Oxford Economics, where she has been a leading thinker in terms of country risk, international supply chains. And I'm very pleased to welcome Christine today.
Morning.
So I'm looking forward to drawing on your expertise of country risk and supply chains. So I'm going to start with some questions before we open up to the audience for Q&A. So as we saw in the brief introduction, Europe is particularly vulnerable to supply chain disruption, more so than the US or China. What are the leading supply chain issues with Europe?
Well, I think the as you rightly said, Europe is most affected of the three. China's obviously first into lockdown and first out. So it is beginning to restore its own production. The US, of course, was trading a lot less with China before the crisis erupted, partly because of all the China-US trade wars that we've seen going on for some time, but also with Donald Trump's America First attitude, which has really put China into the role of the bad guy. Yeah. Europe, by contrast, apart from Huawei, which has been a different issue, I think, Europe's just been getting ever closer to China. And because of the cost advantages involved in creating supply chains that involve China, it's obviously got very, very deep links. And also, Europe itself is much more embedded in the global supply chain. I mean, you've already mentioned that the US is a relatively closed economy, but the scale of it is quite stark. In the US, goods and services exports are about 12% of GDP, whereas in Europe, goods and service exports are about half of GDP. That's a massive, massive difference, and just shows how Europe is so much damaged by the supply chain disruptions.
I think with supply chains as well, what's interesting is to think how it can be a very key component that can disrupt an entire supply chain. I think, didn't Toyota have an issue with this after the
Yes, it did. That's one of the things with supply chains. I mean, obviously supply chains involve an awful lot of risks. Transportation, quality, delivery, delays in delivery, theft, tampering, cyber risks. And of course, the whole problem with supply chains, I think, is that almost by definition, they're very opaque. And Toyota's problem was some key input, and it was something very, very small that was about the time of the Fukushima disaster in Japan. And Toyota had to suspend its production for many months for the sake of this one component that was made in the Fukushima area and was unavailable elsewhere for quite some time. And as I say, I can't remember what it was, but it was something, you know, a bit like a special screw sort of thing.
Yes.
And, you know, unless you're involved in the manufacture of whatever it is, you're not going to know what that thing is.
No, and probably until
the other example, I think, was also from that same time, and it was the glasses going into Japan, where the Japanese spectacles are made in Thailand, and they were air freighted on, you know, passenger planes.
Yes.
To Japan, and when the Fukushima disaster happened, no, it was the Asian crisis, I'm sorry, and the SARS, I'll get it right in a minute, it was SARS, and of course a lot of travel was suspended. They couldn't get their glasses into Japan, so suddenly if you couldn't see in Japan, you were not able to see for an awful lot longer.
Yes. Are there any points to make around supply chains into China? Are most of those links with smaller Asia countries?
Well, it varies. I mean, Taiwan is obviously the most exposed economy. That's got a lot of, almost 30% of its exports into China. But interestingly, Australia is also very dependent. That's sort of 24%, about a quarter. And South Korea is the same. But otherwise, the other high exposures of trade with China tend to be the smaller Asian economies, which themselves don't tend to have global significance.
I always think it's interesting in the case of Australia actually being as heavily dependent on exports to China as it is, because China is one of the few countries in the world now which has its AAA credit rating. It's a developed economy, but such a lot of its trade is around the export of raw materials.
Absolutely.
It's an anomaly.
Yeah, I mean, it does. If it wasn't a developed economy, you'd be saying that's an economy that's very, very vulnerable. And of course, it's had such an amazing track record recently. I mean, it's now facing a recession because of the COVID crisis. But before that, I think it's something like 30 quarters since it's had a recession.
I think
it's a massive length of time.
It's incredible, yes. But obviously, Australia's had other issues with the mining sector, sort of impacting on production elsewhere. But
yes,
yeah, I think Australia's performed incredibly well, and actually they've handled COVID-19 effectively.
Well, I think geography helps them there. I mean, New Zealand was the same. And I mean, both Australia and New Zealand were very, very quick to close their borders. I know because I got stuck in New Zealand.
New Zealand, yes.
And I mean, it was, and of course, there wasn't any way out because Singapore was first, I think, in Asia to close its borders to air traffic. And then Hong Kong followed, and Australia at the same time. So you couldn't physically get back from New Zealand because there was nowhere to stop off.
Yes, but it proved an effective strategy in terms of containing.
It certainly did. I mean, they've limited the deaths, and they had a very speedy lockdown, which spoilt my holiday, but it did save a lot of people from dying in New Zealand, and probably the same in Australia.
In contrast to the UK, where airports remain open.
Indeed. But then, you know, Australia's today put its retail sales out, and they're down nearly 18% in April. So it's a massive hit, and I'm sure New Zealand's numbers will be very similar.
Yes. So we talked a little about the countries that are affected. What sectors in Europe and the US are most vulnerable to disruption? We've mentioned manufacturing, for example.
Yeah, well, manufacture, assembly, automobiles are particularly bad. Aerospace is another one. Electronics, you know, you think of Apple and its supply chain there, which of course is mainly Taiwanese made, but in China.
Yes.
Chemicals are also affected, fuel, petroleum products, and interestingly, paper and printing. I guess that's because the logs are sourced from one place and, you know, turned into whatever your paper product is elsewhere. And fabricated metal, I think, is the other one. So it's across the board.
Yeah.
And also food manufacture.
Yes. We've seen significant disruption there. I think
Yes.
particularly in meat processing in the US and Canada, because they seem to have concentrations of meat processing in a very small number of plants. And
yes,
they
hence why it was so bad when they got the virus in 2 or 3 plants in America last week, or was it the week before?
Yeah, about 2 weeks ago. And in Alberta in Canada, 2 meat processing plants account for 70% of production. In Canada, it's highly concentrated, and they weren't considered an essential industry at the start. Shops that sell food were, but meat processing plants weren't. So the US actually came perilously close to a shortage of meat.
It's astonishing, really, how the selection of essential sectors was made. You know,
Yes.
You can imagine a bunch of civil servants sitting down with a bit of paper and just not thinking it through properly.
They've missed out a lot of the connectivity, haven't they?
Yes.
You can't have shops selling food if you don't have factories that are processing the food.
And indeed, farmers growing it and shipping it.
And fruit pickers, of which we now have a shortage.
Well, quite.
Yes. So moving back to China, obviously in the last few years, since it's about 2013, China has become rather infamous for the Belt and Road project, which was designed to create uninterrupted supply chain, ironic at the moment, and trading routes across Eurasia. Now, it was controversial even before the pandemic. So what are your thoughts on the impact of the pandemic on Belt and Road, particularly given the vast debts that are now accruing?
Well, I think there's several areas to this, actually. I mean, obviously there'll be some projects will be scaled back now because they just simply won't be economic anymore. And some may even be cancelled. I think it depends on where they are and how important whatever it is to the country that's hosting the project, but also how important it is to China. Because I think although it was aimed as being, boosting connectivity and laudable aims for the host countries when Xi presented this in 2013, the reality is that it's actually more about China's self-interest. So there's 5 strands to it, and each of them will be affected. Policy coordination is the first one. I mean, that was hard enough anyway. It's going to be even harder now when countries are in different stages of dealing with the crisis or emerging from it. Infrastructure connectivity, which is that's the most obvious part of the Belt and Road Initiative that people always focus on. And that will also be stalled at the moment because a lot of the cross-border stuff is stalling because of the virus. And unimpeded trade, clearly that's obviously stalled at the moment as well. But also financial integration. I mean, it's not clear that will actually get any further. Because I think a lot of the countries who have engaged in Belt and Road initiatives are ruining the day of accruing all this massive debt to China, who I think they're beginning to reevaluate as not being quite the benevolent giant that they thought it was. And it's a bit more clear that it's about China's self-interest. I mean, cynics thought that all along, but I think some of the countries that went into projects, I'm thinking here Sri Lanka with Hambantota port, and also Pakistan with its China-Pakistan economic corridor. And I mean, involved in that is the port of Gwadar, which has been part of the so-called string of pearls strategy, which has got, you've probably seen the maps of it, where it's a bit like a string of pearls going around Asia. And it enables China to engage in basically oil trade from the Gulf without going through the Straits of Malacca, which has always been seen as a bottleneck. So it's opening up ports in Burma, Hambantota in Sri Lanka, down the bottom of Sri Lanka, and Gwadar, which is just the other side of the border with the Gulf in Pakistan. And neither Hambantota or Gwadar are at all economic, and they've actually ironically been taken back into full Chinese ownership and leased back to the countries because they're making no money, but still the countries have got this massive debt, which people are beginning to protest about now.
So what are we likely to see happen to the debt? Because you mentioned financial integration, but it doesn't seem that integrated. It just really seems to be the host countries owe China a tremendous amount now.
That's
so
right.
Is China likely to seize assets?
I think probably what is the most likely route out is they'll do debt for equity swaps, which is essentially what happened with Gwadar and Hambantota. There may be some write-offs over time. It depends on who it is, what it's for. There may be some, selling of whatever the asset is to somebody else, perhaps to a private Chinese company rather than a state-owned one. But I'm not sure. I mean, it depends critically on what the asset is and how important it is to China and to the host country, of course.
Yeah.
I mean, in the case of Sri Lanka, the modernisation of Colombo port was really, really important for Sri Lanka and deepening their trade links, because Sri Lanka is a natural deep harbour in Colombo, and if they can attract more of the big container traffic through and then ship it to India, that would be a big boost for Sri Lanka's economy. But again, that's not happened. It's been talked about massively, but Sri Lanka's got its own problems anyway.
And I'm assuming part of China's motivation here isn't just about trade, it's about military expansion.
Well, certainly that's the motivation behind the string of pearls.
Yeah.
It's it's military and providing deep water ports for China's military, which of course is expanding rapidly. I mean, it's only, I think 5 years ago, I remember looking, and it didn't have an aircraft carrier, and it bought a second-hand one from Ukraine.
Yes, it did.
And now it's got several.
Yes, it definitely, its military is expanding quite significantly.
Yes, and it's being more assertive with it too, as we've seen in the South China Sea in recent weeks.
Yes, and it's interesting actually, from a slightly tangential point, is China is being more assertive. At the moment, the world's attention is diverted.
Yes, it was. But the trouble is, it then shoots itself in the foot by doing what it did with the activists in Hong Kong.
Yes.
Seized the moment and arrested 15 of them just at a time when it thought the world was looking away. And in fact, the world has been really, really shocked by it.
Yes. Yes, not a good PR move.
No. But then this whole, is it wolf diplomacy, they're calling it?
Yes.
I when I was in New Zealand, I was listening to some of the things that the UK Chinese embassy was broadcasting, and it was absolutely shocking, the tone of it.
Yes. Yeah, I think we seem to be on course for confrontation.
Yes, I think that's right. But interestingly, whereas in the past China may have been a bit more what's the word? A bit unwilling to say much in response. They're now being much quicker in coming forward and rebutting the criticism quite harshly, whereas they might have taken it in the past.
Yeah, but they're definitely being far more assertive.
Now,
what I found interesting since lockdown is when I called Virgin Media about broadband or O2 about my mobile, I've come through to a call centre in the UK. I'm sure this is, and they all tell me in the call centres they're all working from home, which made me consider what impact is COVID-19 having on the supply chains and infrastructure that has emerged around call centres. Because oftentimes I've called a call centre and they're in India or the Philippines, and I'm thinking, what impact is that having? And are we going to see a lot of those jobs repatriated?
I think it's quite possible. I think there'll be several influences. One is that there'll be increased and more speedy implemented automation, which, having had problems with my Skybox recently, is just infuriating when you never get to a person. But I think that's one of the biggest consequences for the kind of lower value added stuff. I think there'll also be a consequence in terms of lower quality of service provided. Again, using my Sky example, the chappie I was talking to was working from home. He didn't have any technical support, and he was having on a different line to call himself to get the technical support, when in fact, if he'd spoken to a technical man in the first place, the problem would have been resolved in 30 seconds as opposed to the hour I was on the phone. So I think we might very well see service levels fall. But the other thing which I think we are already seeing is that the higher skill aspects of the call centre services will be repatriated, because people are getting fed up with the points I've just made. And that will have massive consequences for Philippines, India, Malaysia, Bangladesh, all these countries where you've got quite a concentration of call centres. And of course, the jobs in the call centres in those countries are actually quite high value for those countries. The workers are well paid, they're well skilled. And so these are the, almost the emerging middle class in these countries. So if they start losing their jobs, that will have big implications for domestic demand where they're located.
And I can imagine in those countries, if you have, say, 2 million call centre workers in the Philippines, they're told to work from home, their internet connectivity is likely to be of a lower standard at home than it perhaps is in the UK when we're told to work from home.
I think that's the other thing. And I'm not sure they'd be able to anyway, because the living conditions are quite different, aren't they?
Yeah, they are. Now, on the subject of working from home, we're all at home speaking on this webinar, tuning into the webinar. And the government edict has been work from home if you can, stay at home. So what is likely to be the medium-term impact of the move to work from home on the commercial property market? And what knock-on effect will that have for pension funds and other investors?
Well, I think for the commercial property market, it is net negative, because I think a lot of companies will take the opportunity of allowing more of their workers to work from home. I don't think it'll be permanent, like, was it Twitter said that their employees could work from home forever. I don't think that will be the route that people go down, but I can very easily see a situation where people work at home perhaps 2 days a week, maybe 3, and then only go in the office in a staggered fashion the other days. And that would then enable more social distancing within the office. But of course, if you're not allowed to hot desk, then there's no space saving. So it just means for companies, and commercial property companies in particular, their costs will rise dramatically. And obviously there's knock-on effects for the areas, particularly the kind of high value concentrations of office space, like in the city or Docklands, New York, Singapore, where you've got a big infrastructure around the office developments, your sandwich shops, your dry cleaners, all of that sort of stuff. And also your gyms and your personal trainers and things like that, where there's a heavy concentration of all that, to say nothing of the hospitality industry, of course.
Yes.
And they will all, see a much thinner footfall for their services. Some of them might shift towards where the workers live, to the extent that these things don't exist there already. But it does have massive implications for the way we live and the way we get there. Almost everyone I speak to has just bought a bike with a view to, not going back on public transport. And I think that's going to be common to a lot of people. But the trouble with all this is, it's fine working from home if you're a professional, but if you're essentially blue collar, then it doesn't work. I mean, personal care, you've got to have your hairdresser cutting your hair.
Yes.
If you pick crops, as we've already mentioned, or manufacture whatever widget it is you're manufacturing, all of that will still need to be done in work premises. Equally, deliveries and construction, obviously. So there'll be a big new divide, and it will essentially be white collar versus blue collar. I did very cynically think, when the government started easing the lockdown in the UK, that it was because they wanted their cleaner back and their nanny back very early on.
Yeah, it gave that impression, didn't it?
Yes.
And then it creates a bigger divide between those people who can work from home, which in a pandemic is safer, and those people who don't or are unable to, and then are at higher risk.
Exactly.
As well.
Exactly.
If we're seeing potentially lower occupancy of business and commercial property in the centre of London, do you think, and New York, Singapore, do you think we'll see more residential property emerge as a result? Do you think offices will be repurposed?
I think there might be. Some of them will be. Certainly where I live in North London, that's been going on for quite some time, but that's because big headquarters offices in this part of North London are less popular now, because they're just not needed. Whether that will extend into the city is a different matter, but I think there would be demand for it. And it would, of course, help meet some of the housing shortages, which is another structural problem the UK economy faces. So, I think that there are possible advantages to come from it. And tying back to my previous point about the public transport, if you don't want to go on public transport, then it's a lot easier if you live next door to the office, isn't it? Most
definitely. We may even get to the position then, if your people use public transport, we can get a seat on the tube.
Well, only if there's nobody next to us.
Of course. Okay, so with more people working from home and a significant shutdown in industrial production, obviously the demand for oil has fallen to previously unknown lows. What do you see as the longer term impact on the fall of demand on the sector and patterns of consumption?
Well, in the first place, obviously, GCC and all the oil producers are threatened with recession. And I mean, there's even talk of the Gulf pegs beginning to break, it's something that rears its ugly head every now and then. It's always poor little Oman that's the first likely victim of it. But I'd be surprised if the pegs went, because too much in the Gulf is associated with the fixed dollar peg, which has credibility. So I suspect that won't happen. But what will happen for sure is the Gulf economies are very badly hit. The oil sector, obviously, but the non-oil sector too. So that's an obvious consequence. The other obvious consequence is really for the rest of the world, because if the Gulf economies are suffering, their wealth will also suffer. And so, that will mean that there's less investment flowing from there into the advanced economies or the emerging world. And that will have implications for the quality of investments that the state sovereign wealth funds make. Because whereas up to now they can, buy the Ritz Hotel, and in a sense it doesn't really matter how its trading performance is, because they've got the asset value. If they're scrabbling around a bit more for wealth, then that's not going to be the case. And I think obviously there's implications for all the luxury good producers, and also for the property market in the West End. Frankly, you think of the SW1 postcode. A lot of those shops on the likes of Sloane Street are very dependent on Gulf demand. The top end car manufacturers, the jewelers, the designer clothiers, all of those will suffer. But I think there's also massive implications beyond the loss of riches in the oil producers. The big thing, I think, is on the shale sector in the US, because I think that will suffer a major blow from which it may not recover. Shale is quite a dirty way of production. It's been great for the US in the short term. It's made them almost self-sufficient in their oil production. But in many ways, it was always a finite resource, and it may be that because it's an expensive form of oil extraction, that it just doesn't resume anymore. And that would have implications then for OPEC. It'll be another nail in the coffin of America as the world's global leader, because it will no longer have a voice at the oil table. So there's massive implications there. And of course, the normal macro implications of a fall in the oil price: good for inflation in the oil users, bad for external balances in the oil producers, good for external balances in the oil users. The obvious macro consequences. And also knock-on implications for things like petrochemicals, which in the US are, can rely on the shale supplies. And if they have to go back to Gulf supplies, that puts OPEC back in the driving seat again.
It's been a dilemma for Trump, hasn't it, the low oil prices? Because obviously he wants high oil prices to maintain shale production, but his electorate like low oil prices. Yes. So he can't speak out too vociferously. But am I correct now that OPEC controls, it's only about 30% of oil production, wasn't it? Was that the figure going into the crisis?
It may be, because it was always only ever about half, and then the shale output in the US grew so much, so it's obviously squeezed down. So it will be that sort of amount, I think.
Now, moving on, what do you think the impact of the pandemic will be on trade finance, and what are likely to be the knock-on effects of that?
Well, trade finance will take a big hit, won't it? Because whilst there may be more demand for paper-backed trade transactions, so guarantees or so on are more required in today's climate, I think the banks will be perhaps less willing to supply trade finance. And obviously, in the first place, demand's going to fall because trade volumes are going to fall. Now, trade volumes generally fall much more rapidly than GDP falls. And the forecast for trade disruption is something between 10 and 30% drop this year. over the course of the year. So that's obviously going to impact on the trade finance flows. It's massive implications for liquidity for the countries doing the trading, for the countries doing the importing. That some goods may not get trade finance backing, but also, as I say, the bank's appetite may begin to fall back, because I think one of the things with trade finance is that it's the lowest risk form of cross-border finance, because it's typically shortest term. Yeah. It's also backed by goods. So most banks that do any cross-border business have appetite for trade finance. But in a world where country ratings are bound to fall because of the impact of the crisis on the sovereign credit fundamentals, then some of the lower risk exporters, as in worst risk exporters, they may see them becoming unable to get trade finance backing for their exports. Yes. So there's massive implications for that, and I think there's also long-term implications for the freight industry. If you've got falls in volumes of trade of the sort of proportion I'm talking about, then shipping capacity is going to plummet. I mean, it's a very cyclical industry at best, and we've already seen air freight capacity down 80% plus since the crisis started. So this is shocking stuff. So for countries like, say, Kenya with its flour trade, you're not going to be getting imported flours from Kenya at the moment, are you? Or was it peas and things like that used to come in from there, all the high value greens through the winter? Well, that's not going to be happening, is it?
No, not at all. And over what sort of time frame might we see some sort of rebound? Or do you think
I think that depends on how long the lockdowns last, doesn't it? I think and to what extent the supply chains stay disrupted. I mean, depending on the crop or commodity that you've got, if you're a grain exporter, you can't hang on to it for too long. It depends on your storage capacity, doesn't it? And the more perishable, the more perishable goods. Obviously, you've got a very short time frame for that. So you could see whole sectors being wiped out, like the flowers and the vegetables in Kenya, because that relies on trade finance to get the goods out. So what I'm talking about relies on air freight to get the goods out.
Yes, definitely. And is there anything you think the governments can do in terms of economic policy to boost trade once the lockdown ends? Or do you think it's actually going to be commercial organisations that lead the way?
I think with almost everything, is going to be commercial organisations, but I think government can show a good lead. I was interested to read in today's FT about the French and German proposal for a European-wide recovery fund that gives grants. And I think that would be the sort of thing that many countries should emulate, because I think it's important that, new activity is created that stimulates, I mean, in a sense, almost tries to redirect the economic development into a, perhaps cleaner form of trading or something, so that you end some things, I mean, that are disrupted anyway by the crisis. You say, well, actually, we won't do it that way anymore. We'll do it this way from now on. And for that, you do need to have government leadership, and you probably need, some sort of incentives like temporary exemptions and tax holidays. And I mean, we've seen in the UK quite a lot of provision of soft loans and guarantees, and I think that's all very important to get economies back on the road again.
Surely there'd be an argument to say government should back significant investment in infrastructure now. Yes. And it could be clean technologies as well, because our infrastructure is falling into disrepair. And it would seem if whatever the government invests in infrastructure, they probably get a third, was it threefold return in terms of economic growth?
I think that's right. But I mean, the trouble is you've got a lot of structural things going on in this country. One of the arguments against being able to very quickly embark on infrastructure projects is our planning system. Oh, yes. So, you could only quickly do shovel-ready projects which are already through that planning stage. And, we've seen the farce of the third runway at Heathrow, Well, it looks like that probably won't be needed now, so that will die a death, as will Gatwick expansion. But you know, the HS2 is also not proving an easy thing to get underway.
Yeah, we do seem to have too many rounds of planning and public consultations, whereas I'm assuming in Asian countries they'll just be able to plough ahead and build infrastructure now.
Well,
and what about the US? Because their infrastructure is falling into disrepair. Are they as stymied by planning rules as we are in the UK? Or could they actually use that to boost their economies?
In the US, the risks are different. I think where they're so inefficient, as we've seen in the handling of the crisis actually, is the federal versus state divide. I think that's key in the US, that you know the federal level cannot impose on state level in all aspects of policy. And that means there's an extra layer thrown in, which makes it more difficult to get shovel-ready projects on the go that cross state borders. I guess it's fine within states because the states can just do them. But of course, state finances are quite constrained. I mean, federal finances aren't that hot either, but they've got the central bank to you know, create money if need be. But you know, whereas states haven't, and they've got quite hefty debts in the first place. Okay, so
massive investment in infrastructure may not be the way forward at present. There's really too many.
I think it would be what we'd like to see, but I'm just not sure it would actually happen.
Come to fruition. Okay, a last question from me. Is there a risk to free trade now from the pandemic? I mean, we were seeing the emergence of trade wars between China and the US prior to the lockdown, but what are your thoughts going forward? Will they intensify?
I think it will, yes. I think there is a risk to free trade. I think the noises coming out of the US are quite shocking. But I think more structurally, I think a lot of countries are saying to themselves, is it sensible to rely for a strategically important thing, whether it's PPE in the case of the UK health sector, or whether it's, you know, some food components that go into our food manufacturing industry? Is it wise to rely on an import from overseas for these strategically important things? And I think there'll be a rethink of that. And countries will seek, I think, to become more resilient to this sort of risk going forward. So they may not go down the route of a search for self-sufficiency, because at the end of the day, cost savings are what has driven free trade and cross-border trade. And I think there'll still be a search for that, but I think there'll be much more of a move away from, in certain sectors, reliance on an imported thing. And I think in all sectors, if you are getting your widget from wherever, you make sure you can get your widget from somewhere else as well.
So we might see just-in-time production complemented, if not replaced by just-in-case production.
Yes, I think that's a good line to end on.
Okay, well, thank you very much. Jeff, we'll hand over to you now for questions from the audience.
Yes, thank you both. We've been tracking some of the questions coming in. We've got some left over from Monday, as I mentioned before. Our first question goes back to the earlier subject of China you were mentioning, which is, bearing in mind we've seen existing trend for companies reducing dependence on China as a result of trade wars, increased costs, and what some are calling techno-nationalism. Does the current situation to some degree provide an extension of a prevailing trend? And I guess as a follow-on part of that, are we likely to see countries presently dependent looking at new arrangements? What would they be, particularly for maybe countries in, or companies in EU countries?
Can you just repeat the second part of that, please?
The second part of the question is, for those countries whose companies are dependent in the EU, for example, what alternative trade arrangements would they be looking for?
Well, I think we might actually see a split within the EU, with those countries, perhaps the Western and wealthier countries, who look to do slightly less trade with China, well, find alternative sources of supply, and perhaps the Central and East European countries, and perhaps even Southern countries to a certain extent, I think will be courted by China going forward, and their dependence on China might actually rise in the coming years. I can actually see more of a split within the EU emerging.
I think that's right, and we've seen that with the Belt and Road already, because the rail link goes to Madrid, I think.
It's true. Yes. So I think it will exacerbate that divide. I think some countries, more particularly the US, were moving away from heavy dependence on China prior to this, partly for cost reasons as well. China was a low-cost production centre, but wages have risen. It's now cheaper to produce in perhaps Vietnam or Cambodia. So I think we'll see that trend continue as well.
Yes, I think that's right. And also, of course, one of the consequences of the disruption to trade volumes is that shipping costs will change, as in freight costs. So in the short term, there'll be a massive drop in freight costs because there's oversupply. But in the longer term, as that supply is taken out, then the shippers will be able to raise their costs.
Yes, I think we'll see the same with airlines as well. When
yes, we will.
BA and the other airlines start to fly, it will be cheap flights to entice us all back on board. But we'll see such tremendous consolidation across the sector. I think give it 18 months and fly will be expensive.
Yes.
Again, I can't imagine we'll see the cheap EasyJet package holiday to Greece re-emerging anytime soon, not in a sustainable way.
I think Stelios will be cancelling his order for his Airbuses, won't he?
I think he will be, yes. I mean, so you can't have a cheap holiday that involves social distancing. The economics do not work.
Right, yeah.
Yeah.
Well, I mean, there's going to be fewer places to go because there's going to be less restaurants and bars to go to when you get there.
Exactly. Because in Madrid, I think 50% of restaurants haven't reopened. Have
well,
they?
sure.
I mean, of course, the takeaways have, but you know, you can't work with 30% capacity and still pay your chefs in the kitchen the same amount.
Yeah, I'm sure it'll be the same here.
Sadly. Yeah, I think it will as well. Well, isn't our jobless figures risen to, is it 2 million today? And I could easily see that.
It's enormous. I mean, they're saying that 10 million workers in the UK, that's getting on for half the labour force, one way or t'other on government support, whether it's furloughing or on universal credit.
Yeah, it's unsustainable.
Yeah.
Yeah.
Thanks both. Next question. This concerns the Middle East, which we touched on earlier. As we know, Chinese involvement in the MENA region is significant. And also we're talking about the redrawing of these supply chains. Places like Dubai have established themselves as a re-export centre. I suppose less on the China side, but more on that re-export centre. Will the redrawing of supply chains impact on the principle of re-exporting?
I don't think it'll impact on the principle. I just think the volumes will be a lot less. And that's got massive implications for Singapore as well, because that's a big, re-export centre. But I think, as I mentioned, I touched on when I was talking about the Belt and Road, there's not all that many huge enough ports to be able to get your big boats in, to get the stuff in or out of. So there has to be a transshipment and re-export role in those markets. And that won't change.
No, I think Dubai's position will be hit in other ways. Obviously, Dubai Airport was one of the busiest in the world by passenger numbers, and that's been significantly curtailed. It's not going to have the tourists this year. I think it will come under pressure as a financial hub. I know the government's extending visas for expat workers now who are unemployed, but I think, the Emirate as a whole will take a hit hugely. And I would never write Dubai off. It's fantastic at reinventing itself. It came through the financial crisis of 2008, but I think it's going to be looking for bailouts from Abu Dhabi very soon.
And of course, Abu Dhabi is going to be in less of a position to provide such a bailout because, as I mentioned, Gulf wealth is going to be down with the oil price.
Yeah.
Next question, slightly different track here, very interesting question. Can we anticipate a food shortage further down the line if things continue, bearing in mind the impact on agricultural supply chains?
Well, I was expecting a shortage of soft fruits and berries in the UK this summer because we haven't had the migrant workers coming in to pick the fruit. And I know some UK workers have been reassigned to fruit picking and they pick too slowly and they've actually sort of been fired. And then it turns out we might actually have a glut of strawberries this year because events like Wimbledon aren't taking place. So we're going to be encouraged to eat them at home. But yes, I think into the autumn, I think we could see shortages of certain fruits and vegetables and crops because picking hasn't taken place on the same scale. And I think we might see some shortages of tea supply from India because obviously tea pickers, I think they weren't allowed to work for 2 or 3 weeks. And I know that ruined some sectors of the tea crop as well. What's your thought, Christine?
Well, I think there'll be there'll be a change in the food industry. I think there will be shortages. I think food will become much more seasonal like it used to be. So that, as I mentioned about the Kenyan, peas and things, we will not be getting those anymore. So unless we can grow our peas to be, being harvested all through the year, we're either back on frozen peas or we're not having fresh peas through the winter. So I think we can expect to see a narrower range of foodstuffs available in our supermarkets in general. So we'll be back to, in the winter, we have root vegetables here, and in the summer we have salads, and we don't have quite as much salad stuff in the winter. Although I think there has been quite a lot of change in technology, so that there's a lot more stuff being grown under, the plastic stuff. I can't remember the name of it. But there's a lot more of that. And there's also this business of the vertical farms. I've been seeing various things in New Zealand. There was a program about it, about Singapore trying to become 30% self-sufficient in food by using these vertical farms that don't see sunlight. They're all done indoors, which is astonishing stuff. And they're doing things on the roofs of office building and things, and hoping to be able to provide 30% of Singapore's food that way, which is an incredible advance, with implications, of course, for the Gulf.
Well, isn't the only Gulf country that has any sort of food agribusiness is Saudi Arabia, isn't it? And that's always challenged, but obviously because of it's a water-intensive industry.
Yeah.
As well.
Next question. I think we covered this partly on Monday and perhaps a bit earlier as well. With regards to supply chains being redrawn, so goods like food, medicine, and medical equipment are stored more closely to home. Someone's saying this sounds all well and good, but how long would such a change take? And is this also dependent on how long the virus lasts for, and if we're likely to see similar pandemics in future?
Well, one thing I find interesting is how quickly UK industry has adapted. There was a thing on the television, I think it was yesterday, with some company making plastic screening. And they normally, I can't remember what they normally made, but they've shifted a proportion of their business to doing the sneeze screens, as they call them. And that's an astonishingly speedy turnaround, completely different from what they were doing before. So I think, we have the capacity to do more, but we certainly need to be doing more, because it's daft to be reliant on, unknown quality imports that, like that shipment that came in from Turkey that the government made such a song and dance about, and it was 4 days late or whatever, then it's all ended up being useless. I mean, that's hopeless.
Yeah, that was the surgical gowns, wasn't it? The protective gowns. I think we will see, as you said, private enterprise will move towards production. Yeah, either close to home, i.e. for the UK, somewhere in Europe, but hey, we've got the Brexit to consider as well, but far more domestic production as well. And if we've got higher unemployment in the UK, for example, there will be an appetite for government to support that. Yes. And I think you could have an effective campaign around Buy British as well. So I think we'll actually see a reasonable, speedy, swift towards more national or regional production.
Probably got time for a couple more questions. Do you think we're likely to see a return to more state-owned businesses globally going forward, and how is that likely to change supply chains?
I think we will, because with the transfer of debt now, the bailouts from obviously from the government's balance sheets to private companies, I think we could see, if those companies begin to default, the government owning quite a number of them by default. So I think there will be a move towards more nationalisation of certain sectors, or if not nationalisation, a much larger government presence in directing those industries.
I think overall you're going to have a larger public sector, full stop. I think there's going to be an acceptance that certain things have to be done better and have to be done by government.
Although there's an argument to say, if you think the UK response to the pandemic, the government hasn't handled this particularly well, and it's actually then been private companies that have been more effective. So we will have a larger public sector, but we need an effective and efficient public sector as well. And I think in the UK, that's the challenge. It won't be a challenge in Germany, for example.
Yeah, I think it is. I mean, you touched on Brexit there. They still haven't hired the 50,000 extra customs officers that they need for Brexit. Well, where are they going to get people who are skilled to do that? I used to be a customs officer. The tariff, even in my day, 40 years ago, was about 3 foot deep. I mean, it was a massive document, and, officers had to be familiar with that. Well, you don't get that sort of experience overnight. And you certainly don't get it if you work for Serco.
It's very true.
I think our final question is a really interesting one, actually, so probably a good point at which to finish. There's lots of talk around COVID making the case for sustainability. I suppose sustainability practices many see as being the heart of how this all started. But to what extent should we have concerns that a massive global recession means that people deem sustainability something of a luxury when it comes to business going forward?
I think it's very short-sighted if they do that. I think the virus in some respects is the planet's way of telling the human race that we abuse it and we actually need to live in a more sustainable way if we want to continue to live sort of healthy lives. So I can see some governments will say, well, we can't deal with sustainability now, we have to get the economies back on track. But as Christine mentioned earlier, it's a perfect opportunity to move industry and production forward in a more sustainable way.
It is, but then they do things like in the UK saying don't use public transport.
Yeah, drive to work.
Yeah, drive to work. Well, that's not going to work, is it? So,
no.
You know, it's kind of one step forward, two steps back. So it's got to be a bit more joined up. But I guess in the short term, till they've worked out how to social distance on public transport, it's inevitable that more people will drive or, as I mentioned, cycle. And that's good if that's the case.
But I guess it depends how demand returns as well. So, for example, if we don't have the same level of demand for air travel as we did 4 months ago, that actually air travel becomes more sustainable because fewer people are flying.
I think that's right. I think a lot of people are questioning their appetite to go abroad ever again, actually.
Yes.
I think there'll be...
Depends on the business travel market as well, doesn't it? Will we have webinars or will we all want to get together at a conference next year?
Well, I think the webinars are going to be taking off, aren't they? Because people have realised it's actually quite a pleasant way to do things.
Mm-hmm. I'm sure at some point, Jeff, will the webinars be accompanied by a delivery of pastries as well? Will Uber Eats be at the door?
It's something we're working on, absolutely. I imagine there'll be all manner of technology driving these things forward over the coming weeks and months. So yeah, we'll keep everyone posted on that. We'd like to think something possible, but we'll probably have to.
And also, I think going back to that question, it will differ from countries. The UK, we don't seem to be the most efficient and well organised at present. But I think you'll look at other countries in Europe, Germany, for example, perhaps Scandinavia, and I think they will move forward in a more sustainable way than they have been.
And that Northern Europe is likely to emerge best and quickest from this crisis as well, apart from Belgium, I think. So, you know, it's interesting that there will be winners, and some of the winners are obvious, but there will be some quite clear losers.
Yes.
I think we're out of time. There are a couple more perhaps we'll get into on Friday. I think this probably is a good point at which to finish. Some of the other questions relate to what we're going to be covering on Friday, so that'll be a nice sort of linkage there. So yes, that does bring this morning's second part of this 3-part webinar to a close. Thanks to Elizabeth and to Christine, and thank you to you all for tuning in. As I say, we're sorry we didn't get around to all of your questions, but there's some good ones left for Friday. We'll be seeing you at 10 a.m. for the concluding part of this 3-part series. More opportunities for interaction and engagement in these unprecedented times. Until then, take care, and we shall see you on Friday.
Thank you.
Hello, everyone. Welcome back for the third and final part of this week's 3-part webinar on geopolitical risk in the age of COVID-19. Elizabeth is with us again, and today we'll be looking at how the current situation will change the geopolitical risk landscape going forward, who the winners and losers might be, and whether these times will accelerate existing trends or cause a break from what went before. Welcome back, Elizabeth.
Good morning. Thank you, Jeff, and thank you for everyone who's joined us again. So today we are looking at the geopolitical risk of coronavirus and how it is changing the international political landscape. So we're going to look at, as Jeff said, who are the winners and losers? Also, what will be the role for international institutions and what will be the determinants of political legitimacy going forward? So COVID-19 will shape the nature of the future global order. The question is, to what extent it will be an accelerator of existing trends or a geopolitical break with what's gone before. So if we move on to the picture, let's think about the world order pre-coronavirus. Do any of you remember this photograph? It was taken in 2018 at the G7 summit. And it didn't look like the happiest gathering, did it? We have Donald Trump sitting with his arms folded, looking less than impressed as Angela Merkel prevails upon him to maintain the existing status quo and liberal values. And she's surrounded by the other G7 leaders and their advisors. Now, if you look at the next picture in the series, these are all online, you get a more positive repartee between Trump and Merkel, because Trump actually puts his hand out, puts his hand on top of Angela's, and you think, oh, maybe there was a little bit of bonding, but after that, Trump walks away and says, you know, makes his speech disavowing many of the principles of international institutions and the world order as we've known it since the end of the Second World War. So prior to the outbreak of the virus, we were seeing the fragmentation of multilateralism. Multilateral institutions were losing the influence they'd established since the Second World War. Europe had moved into relative decline in the wake of the rise of China, and the EU particularly was beset by internal challenges. The United States under President Donald Trump was following a nationalist course, which he continues to do, and many governments in the developing world will be beset by issues of legitimacy. So against this challenging background, what can we expect from the post-COVID-19 world order, or will we see an increasingly world disorder? So the response to COVID-19 has brought nationalist tendencies to the fore, and the world will emerge from the crisis into a global order that is increasingly fragmented. All countries will be in a weakened economic state. That's actually the one common denominator. All countries will be negatively impacted. It's just a question of how badly each country will be impacted. Now, the trajectory of countries coming out of the crisis will play a role in shaping the new global order. Given the high death toll and infection rate in the US, it may be the last developed country to truly exit the current lockdown, and his policies in some states of relaxing lockdown, perhaps too early, could actually lead to a second wave of infections. Only last week, China locked down Jilin City, whilst Russia and Brazil are yet to come to grips truly with the pandemic, despite moves to lift their own respective lockdowns. If we move on to the graph now, we can see this is a graph of how political stability and instability changed in Europe since 2013. So for our risk ratings, 2013 is the baseline. These ratings are from December last year, so December 2019, before we really went into the COVID-19 pandemic. And as you can see, a red line is a deterioration and a green line is an improvement. So over that 6-year period, we can see very few countries in Europe actually experienced an increase in political stability and political cohesion. And within that, we're including social and economic cohesion as well. So going into this crisis, Europe was in a state of turmoil, is too strong a word for it, but definitely each country was dealing with its own internal challenges. If we move on to the map of Europe, we see the map divides Europe, each country, into its component regions. And if Sam plays the animation, we can see how the risk ratings for each region in Europe has changed since 2016. This also includes a forecast for impact of coronavirus that will take us into 2021. But we can see with the variations of the color, the darker the green, the more stable. As we progress into red, if you look at the right of the map, the more unstable. We can see that there's variations between countries in Europe, as we would expect, but also considerable variations with the level of stability and definitely prosperity within different regions within those countries. And as this plays through to the end of 2019, we'll see Lombardia appear as an example in Italy, and their risk rating increased quite significantly because they were so severely impacted by the coronavirus. So Europe entered the crisis in a state of increasing fragmentation and discord. These issues have been magnified as the crisis unfolded. There's a lack of solidarity between European states, from the closing of borders to conflict over medical supplies. The cherished EU principle of freedom of movement, and a significant factor in the UK decision to vote leave, has actually ceased. Europe is facing another defining moment in its history, and the mantra that Europe advances in crisis appears not to be holding true. COVID-19 has reinforced the conflict that has existed at the heart of the EU for decades, between credit countries and budget recipient countries, between wealthier northern states and their poorer southern neighbours. Once again, the southern states are pushing for the mutualisation of risk, while the northern states are resisting. Budget discussions before the crisis between creditor and debtor nations were already tense. COVID-19 is reinforcing and exacerbating those tensions. So will we see a leap of faith into further integration within the EU? In my view, it's unlikely. The EU has reached the point where continued integration would be perceived as crossing into sovereign territory for many states. The more viable economic model for a cohesive EU that is a transfer union, and the willingness of wealthier countries to accept large debt transfers from poorer states and the mutualisation of risk through some form of bonds is unlikely too. In fact, I'd say such a move is almost impossible. It's more likely that we'll see an attempt to ameliorate problems by limited moves to offer assistance to southern countries, partial mutualisation of debt. The muddling through which we've seen for the past decades will continue, and this approach has not improved the economic performance of the Eurozone as a whole. During the crisis, the EU has become more marginal to the national agendas of member states and is likely to continue to do so. Whilst there was talk of a two-speed Europe developing after Brexit, we're likely to see a multi-speed Europe with small groups of countries coming together to try to solve specific issues that impact them. The discord runs deep. While the conflict rages between North and South over funding, conflicts exist between Eastern and Western states over immigration and liberalism. When, if you remember, in early April this year, the EU's Court of Justice ruled that Poland, Hungary and the Czech Republic broke EU law by refusing to relocate refugees during the migrant crisis in 2015, the three nations offered no apologies or to change policy. Eastern EU member states are no longer willing to accept the dictates of their Western counterparts, and in this sense, we're likely to see Europe move in a more illiberal direction. Internationally, we should also expect a weaker EU. The EU continues to abrogate responsibility for playing the role of a major international actor, because when tough choices had to be made, the first budget to be cut, and this was before the pandemic, was the budget for defence. See, outside of a pandemic, military strength remains a vital power metric and seems a particularly short-sighted decision when the US is demonstrating its lowest level of interest in EU security since the Second World War. So as EU member states turn inwards and pursue a more nationalist course, how does the relative position of the EU change in relation to China? And what is China's new relation with the world as a result of the coronavirus pandemic? If we go on to the next slide, we can see the president of China with the head of the World Health Organization. So the coronavirus, as we know, originated in China, and it was the most catastrophic PR disaster for the country. There have been allegations that a biolab was potentially the source of the virus, but COVID-19, it has to be said, is not the most useful of bioweapons, as it's uncontrollable and in many cases asymptomatic. The scientific community is in agreement that this is not a man-made virus, although the origins of the virus are not completely clear. Now, Chinese influence in international organizations has become very clear during this crisis and has influenced the World Health Organization's response to an outbreak that occurred in China. Now, if an organization, as we all know, wants to operate out of China, it has to operate by Chinese rules, and the World Health Organization is no exception. In the early weeks of the outbreak, which was a crucial time if the spread of the virus was to be thwarted, the World Health Organization was given inadequate access on the ground in Wuhan, the origin of the virus. On the 14th of January, the organization gave China the all clear by saying there was no human-to-human transmission. Now, this announcement compromised its integrity. The statement was untrue, but the organization relied uncritically on Chinese data. Now, this was in the context of the CCP covering up the emergence of the virus and persecuting medical practitioners who first identified it. Now, against this background, and given his personality type, Trump's announcement that he may well suspend funding or terminate it completely to the World Health Organization cannot be considered surprising. Now, Taiwan, back in January, had one of the most effective responses in the world to COVID-19, but the World Health Organization was prevented from working with the Taiwanese government and their scientists because Taiwan is not recognized by China as a member. The World Health Organization couldn't take questions about Taiwan in press conferences and share their best practices with the world. They ignored early warnings from Taiwan about human-to-human transmission, which, as we know to our detriment, proved to be accurate. Now, if we go on to the next slide, we can look at how President Xi Jinping is trying to manage a homegrown pandemic. You see, COVID-19 has shaken China to its core. It has impacted every individual and company in the country and humiliated China on the international stage. Domestically, there is growing dissent over how the government handled its response to the pandemic. Censorship of information coming out of the medical community undermined faith in government, which has been voiced on social media platforms, particularly in the early weeks of the pandemic. The economic impact has been severe. The country contracted 6.8% year on year in the first quarter of 2020, and it's the first economic contraction in 40 years. Now, this has occurred at a time when growth was already slowing in China, and the secondary impact of the virus spreading internationally is now impacting China as demand for Chinese goods plummets. Now, ensuring the safety of the population and providing economic growth underpins CCP legitimacy. And next year, 2021, is the 100th anniversary of the foundation of the party. Xi Jinping had already noted that this year would be a milestone for China in terms of its economic growth and its policies to alleviate poverty. Now, China's domestic population is the primary audience for his narrative regarding COVID-19, and it's very much about promoting faith in the party to take China out of this dark moment and restore international credibility. For example, China is using every piece of medical aid and personnel they provide in Europe and Africa as a PR propaganda tool. But what they're providing, while it's welcome, is nowhere close to what we would have seen historically from the US in the midst of a crisis. So the question is, has the crisis weakened or strengthened Xi? Well, this is a continuing challenge in which he'll have to show leadership, but it does not necessarily spell doom for him. He's really now coming to grips with management of the pandemic. But we need to look at this in the context of the internal and external factors that were already at play in shaping the narrative prior to the outbreak. Slowing economic growth in China, the US-China trade war, the growing international security of China's Belt and Road Initiative were all impacting on the country. We're seeing an escalation of disputes in the South and East China Seas, and in the Taiwanese general election in January 2020, the pro-independence party was re-elected. Now, there's more challenges, developments, which have been compounded by the CCP's handling of the virus. So militarily, China continues to test the waters to see what it can get away with, what countries will react to and what they won't, at a time when everyone is distracted. The PLA has continued joint exercises in Cambodia. There are transgressions into Taiwanese airspace and submarine activity in the South China Sea. The economic and military costs of trying to take action against Taiwan is far too great at present. That would be the ultimate military provocation to the US in the region, and one that would completely undermine America's international standing if it failed to respond. So if we've now looked at the context in which China is handling the crisis, let's move on and look at the next slide and the position of the United States. Well, when I've titled this slide, Leader of the World, it was, as you can imagine, quite tongue-in-cheek. The US has not shown global leadership during this crisis, and it's questionable whether Trump has actually shown domestic leadership. This is dramatically different from the leadership the US showed in the aftermath of 9/11 and the 2008 financial crisis, where Barack Obama, the then president, who was widely credited with saving the American economic system and perhaps capitalism itself. Now, while Trump, from the onset of his presidency, made it clear that America did not want to lead the world, the rhetoric has become a harsh reality during this crisis. America used to lead by example, and by this measure of power, soft power, it has completely failed. The key metric of power by which the US dominates the world, military strength, is irrelevant during this crisis. There's other factors which define American exceptionalism that may also prove a challenge in the country dealing with this virus and fully reopening the economy. The first is civil liberties. As we've seen, there's been protests in a number of states in America against the lockdown. Many, particularly right-wing voters, see this as a flagrant violation of their civil liberties and believe that the lockdown should never have occurred. There's also the system of federalism, which has prevented a cohesive, united front in containing the pandemic across every state in the Union. And then there's the litigation, which is likely to follow the reopening of the US economy. America is a litigious society. Awards for damages often run into the millions, if not tens of millions of dollars, and thousands of companies are very concerned that if they reopen their manufacturing plants, for example, and workers contract COVID-19, that they will be sued and their businesses will be unable to survive the lawsuits. So there are moves in the US at present to prevent individuals and unions bringing cases against companies for if workers contract COVID-19. And we could see significant disruption to manufacturing and other productive purposes over this year and into next if lawsuits start to emerge surrounding the virus. And fourthly is consumer spending. The American economy, perhaps more than any other in the world, is highly dependent on consumer spending. And as much as Trump and his party might want to, given the harsh economic reality facing many Americans who have lost their jobs, you cannot force people to go out and spend and consume. And without high levels of domestic consumption, the economy is going to take a long time to reboot. So against this backdrop, we should expect a continued deterioration in the US-China relationship throughout the remainder of the year. And part of this, in no small measure, is attributable to the US electoral cycle. Trump was pinning his re-election hopes on a strong economy. But as unemployment reaches 20%, maybe even 25%, the impact on his approval rating will be immense. If we look at the next slide, we can get the sense of Trump's anti-China tweets because Trump will want to shift the blame for the virus and his handling of it, and that blame will be shifted to China. We should also expect the US ability to act domestically and internationally to be further undermined by the November presidential election, which will be highly politicized. Now, as we know, in developed countries, older people are the most likely to vote, and they're also the most likely demographic to experience severe issues and consequences if they contract COVID-19. Unsurprisingly, this demographic generally does not support the concept of herd immunity. And in the context of a presidential election, this is highly significant because we may see a fall in voter turnout in the November election, particularly if America is besieged by a second wave of the virus. Now, the way to ameliorate this would be to set up the mechanisms for postal voting. However, in the key swing states, the electoral procedure is controlled by the Republicans. And this is significant because Trump and the Republican Party believe that their election prospects will be benefited from lower voter turnout, and therefore they have no incentive to facilitate an easy transition to a postal voting system. Only yesterday, Trump threatened the state of Michigan with withholding funding if they proceeded to send out applications for postal ballots. So well ahead of the election, the anti-postal ballot rhetoric from Trump has begun. He's saying it's the sure way to ensure voter fraud. And he's also admitted that with postal voting, a Republican will never again win a presidential election. Now, against this backdrop, there is a high probability that this election will be highly politicized and the process could be seen as rigged and therefore delegitimized. And this is before we even take into account the potential for Russian interference in the election and Trump launching investigations into Democratic nominee Joe Biden, which he almost certainly will. These elections, in some respects, have certain echoes of 2020. Do you remember Florida and the hanging chads? And that election was decided in the end more by the courts and the voters. This is a damaging scenario at any time and could be repeated in November. And this could also have negative repercussions for democracy globally. It is no coincidence that the significant rise in contested outcomes in the developing world occurred after the US, at the time supposedly the world's leading democracy, resorted to the courts to determine the outcome of the 2000 election. It set a precedent, and if this election in November is delegitimized, that will set another very damaging precedent for democracy globally. So let's move on to the next slide and look at the Middle East and middle powers more generally. Once again, the baseline for the ratings was 2013. This data is taken from the end of 2019, and we can see over that 6-year period that the only country in the region that we saw posting a positive increase in political, economic and social stability was actually the UAE. And as we're moving through now the coronavirus pandemic, we expect those numbers to deteriorate, and they are deteriorating, and we expect every country in the Middle East to be recording a seriously negative outcome in, relative to each other, relative to other countries in the world, and against the 2013 baseline. So if we move on to the next slide, you can see that the middle powers, including in this Turkey, Iran, the Gulf states, Russia, all face negative economic consequences as a result of the virus. The crisis has laid bare the weaknesses in their economies and their vulnerabilities to the fluctuation in commodity prices, and particularly oil, and the lack of legitimacy some leaders have because of the absence of democracy in these states. Now, the Gulf states were depending on at least another 5 to 10 years of higher oil revenue before a shift in world energy consumption occurred. And they've been focused on attempts to diversify their economies away from oil during this period. One example is Saudi Arabia's Vision 2030, and we can expect that to be seriously impacted by the virus and low oil prices. The kingdom has already tripled VAT rates from 5% to 15%, and the monthly living allowance for state employees will be suspended from the 1st of June to shore up government finances. Tensions between Iran and the GCC are likely to escalate as a consequence of the virus. The narrative is emerging of coronavirus as a Shia disease that has been spread to the Sunni Arab states by the failures of the Iranian clerics to effectively contain it. While obviously it isn't a Shia virus, the Arab states do have some legitimacy in saying that Iran didn't act swiftly enough to contain the virus, and the virus was transmitted around the Middle East initially by pilgrims returning from the holy sites in Iran to other states in the region. If we consider Turkey another middle power, it's notable that Erdogan, their president's often bellicose rhetoric towards the US has diminished during this pandemic. Now, whilst Ankara, a NATO member, brazenly purchased a Russian S-400 missile defense system in 2019, it's delayed its deployment, which was supposed to take place in April this year, reportedly because of the coronavirus. Now, this delay happened to coincide with the country's application to the Federal Reserve for a swap line to prop up its ailing currency. Now, while the Fed makes decisions about swap lines based purely on economic and financial indicators, I don't believe it's a coincidence that Ankara thought this move could be politically motivated as well if they were seen by the Trump administration as not deploying the Russian missile system and trying to actually improve relations between the two governments. It failed. The Federal Reserve hasn't extended a swap line to Turkey, and actually Qatar came to the rescue a couple of days ago and has offered Turkey a $10 billion swap line as well to shore up the currency and the country's economy. And while Turkey can be seen as a drain on the economic resources of Qatar, I feel given the poor state of relationships between Qatar and neighbouring states, it feels that it benefits from having an ally in the region, even if it's a costly ally economically. Right, if we move on to the next slide, we can see that prior to the pandemic, there had been a rise in authoritarian governments in a number of countries around the world. We have Venezuela, Brazil, Turkey, Philippines, all have democratic systems and all elected voluntarily, strong men who've taken steps to move those systems away from being truly democratic to being more authoritarian. Now, if we move on to the next slide, we can see that the crisis has facilitated strongmen-style leaders' attempts to assume ever greater powers. In Hungary, an EU member state, we should remember, at the end of March, Prime Minister Viktor Orban passed emergency laws that gave him the power to rule by decree for an indefinite period of time, a blatant infringement on the country's democratic institutions and the democratic principles of the EU. In Turkey, President Erdogan already wields significant power and has used the pandemic to float the idea of additional state controls over social media companies, which often post negative comments about his administration. In the Philippines, President Duterte has threatened to shoot anyone breaking lockdown. I guess that would prevent reoffending. And he's also awarded himself emergency powers to silence fake news. You won't be surprised to know fake news is generally anything that contradicts his stated position. In Israel, Prime Minister Benjamin Netanyahu faces corruption charges. His justice minister cited the coronavirus to suspend courts for most cases, including Netanyahu's. And the Prime Minister has now used the crisis to manipulate his way to a fifth term in office by forging a very unlikely alliance with his rival, who heads the largest parliamentary bloc. In India, Prime Minister Modi is also struggling with the handling of the crisis. I mean, he faced a huge challenge given the size of the population, but his policies have been ill-considered at times. The exception perhaps at the moment is Vladimir Putin in Russia. He has been confronted by Russia's prevailing weakness in the face of low oil prices, and forced by the pandemic, he's postponed the vote scheduled for the 22nd of April on constitutional amendments that would enable him to serve 2 further terms as president. This was really seen as a further test of the country's support for him, and as the vote's been postponed, we're not entirely sure of what the population's view of him is at present. He's tried not to be the country's figurehead of leading the fight against the virus, and has tried to delegate this to other political figures such as the mayor of Moscow. Now, perhaps with the exception of Israel, Benjamin Netanyahu, all these leaders should prepare themselves for an increase in civil unrest once the immediate health emergency subsides and the people are able to truly scrutinize the efforts of their leaders and the steps they took to contain the pandemic, which in some instances, particularly Bolsonaro in Brazil, has been to almost deny its existence and to flout social distancing rules and to fire health ministers who disagree with his position on how to handle the crisis. So if we look at the next slide, cast your minds back to the EU elections of 2017. Do you remember the gains the populists made in all of the elections? In Germany, it was the first time that a right-wing party had won seats in the Bundestag since the 1930s. The AfD for Germany, AfD performed very well. Well, the crisis could well lead to a further rise in populism and nationalism. The retreat from globalization to nationalization is government-led during the crisis, and in their responses, this has reinforced existing nationalist trends in response to inequality and anti-establishment tendencies. In the US, the initial protests against the status quo occurred when the country was experiencing its longest bull run since the Great Depression. The country is now experiencing the most massive dislocation since the Second World War. Now, poorer, less skilled workers are unable to work from home. In contrast, the educated knowledge economy is adaptable to home working and is less exposed to disease as a consequence. Unskilled workers are more likely to lose their jobs as a result of the crisis, and if they don't, many of those jobs will become more dangerous for them to do. Corporations, seeing how challenging it will be to employ large numbers of people in one location going forward, will look even more assiduously towards a smaller workforce and the increasing use of the automaton. This will create severe dislocation and millions of job losses as the fourth industrial revolution becomes the post-industrial revolution. Now, in emerging economies, the impact will be even more severe. Protests are likely to re-emerge in many countries around the world in response to heightened inequality and what many will perceive, perhaps with justification, as ineffectual government. So if we move on to the last slide, I'd just like to make some concluding remarks before we move on to Q&A. Big tech, we've heard a tremendous amount about big tech during this crisis, for good or bad. But before we say what a negative impact big tech has in taking over the world, how many of you have placed an order with Amazon since the lockdown? And how many of you, perhaps more interesting, haven't placed an order with Amazon almost every single day of the lockdown? And Amazon has increased its workforce hugely in response to consumer demand. So the US will benefit coming out of this crisis from the power of its life sciences and the power of its technology companies. Now, in the life sciences and biotech space, the US may become the country to provide a real solution to the coronavirus crisis with the development of an effective vaccine. And this is a field where the US continues to exert a competitive advantage over China. Now, there's much talk at the moment that it may not be a US scientist or a US company that develops a coronavirus vaccine, but I'd say there is a very high probability that it will be, and also a very high probability, if not a US company, that it will be a UK or a European company that does this. At the moment, it's slightly more likely than that will happen than it be the Chinese to be the first to develop a vaccine. But also the competition shouldn't be just to who's going to develop the vaccine first, it's who's going to develop the most effective and the safest vaccine. And the jury will be out on that for a while. So the US will be able to restore a certain amount of international power and prestige through its life sciences and biotech companies. The US will also benefit from the size and scope of its technology companies. Amazon has expanded its workforce by 175,000 people during the crisis and is increasing its market share at the expense of the high street and shopping malls, which remain closed. There is talk was before the crisis, about tech giants being broken up. I don't actually see that happening because the functional economy will be dependent on big tech's ability to capture data and tag individuals to trace further outbreaks of the virus. While we've all been working at home, we've given AI far more access to our business and personal information than ever before. And when we stop and think about it, we're aware of the consequences of doing that. We've all done that willingly, perhaps occasionally with no choice, because of the convenience that this technology gives us. Now, these companies are becoming more critical to the Western world and potentially of strategic importance to the West as well. And the power of the US will therefore increase relative to its traditional allies because the US dominates in this field and Europe, Canada, and Japan do not. See, the EU has undermined its ability to compete in this space. The EU likes to regulate any entity it possibly can. And due to its antitrust laws, it's prevented a European champion on the scale of Amazon, Facebook, Google, or Huawei from emerging. And in the present time, I actually see that as a disadvantage for the EU and the UK. Now, this situation will enable China to exert more influence in soft power, tech power, and economic power, as the erratic behavior of Trump will increase the willingness of countries to head towards China as a counter to the US. Now, this process may be slowed if Joe Biden wins the election, but we're unlikely to see a return under any president of a dominant United States with the appetite to lead the world. What we're likely to see coming out of this pandemic is Chinese influence increase in Southeast Asia, across sub-Saharan Africa, and in Eastern and Southern Europe, and this will further divide the EU and Latin America. The virus will accelerate the move away from globalization to regionalization. And the big unknown is whether this trajectory will lead to a Cold War between the US and China. We're already seeing, obviously, trade wars. We've seen the US put further sanctions in effect on Huawei, the Chinese technology company, over the purchase of chips. And its moves against Western countries that want to use Huawei technology in the development of 5G. But whether we see the world divided into spheres of influence between China and the US, as we did in the Cold War, the previous Cold War, between the Soviet Union and the United States, remains unclear. But I don't believe it's beyond the realm of possibility. If the world goes in that direction, I actually think China benefits if Trump wins the next election, because Joe Biden is a slightly more benign figure on the international stage than Trump, and traditional US allies are more likely to work with Biden, with a Biden administration, than an erratic Trump administration. In a Cold War, soft power and diplomacy are key to success, and they are characteristics, obviously, that President Trump doesn't appear to possess. So, Jeff, over to you for Q&A.
Thanks, Elizabeth. I've had a few questions come in, and as I mentioned earlier, some questions that were left over from some of the earlier sessions. First one, this goes back to the start of your presentation. Do you believe there is merit to the suggestion that China's influence, whether it's financial or soft power, on the WHO potentially undermines its credibility? And is that potentially compromising? This is a view that's been raised not just by the right-wing media, but also across the spectrum, I think.
Yes, is the short answer. But I think if we go back to the Cold War, international institutions were always, their loyalties and their position was also always compromised by the competition between the US and the Soviet Union. So that isn't new, that big powers, great powers, influence international institutions. I think what's happened with the World Health Organization is that because of the nature of the Chinese system, they haven't been forthcoming with information, and the organizations uncritically relied on that data. It should absolutely have asked more questions. I can understand, though, why, given the power of China and influence, it didn't. But yes, I think it has undermined its credibility. But at the current moment in time, I don't see internationally there's a viable alternative to the World Health Organization. What I do think is that Trump, I often find with President Trump, with most of the things he says, he does have a valid point. It's just about his rhetoric and how he goes about trying to achieve his objectives. And him saying the US give, I think, the World Health Organization about 400 million a year, and China gives them about 30 or 40 million. Well, if China is exerting the greatest influence, they need to step up and fund the organization. So I think we'll see a change in the way those organizations are funded. And also what I think we have seen is the middle powers. It's been the EU and Australia that have pushed together for an investigation into the origin of the coronavirus within China. It hasn't been the Chinese as a great power said we have to do this, or the US, it's been the middle powers.
Back to the question around Europe, you covered a bit on Europe at the start. Do you feel the current situation has left the EU in a weaker position? There were some concerns originally, particularly when Italy was very much the sick child of Europe when it came to coronavirus, about the future of the euro, but obviously that's leveled out as other countries in Europe have also become stricken. Where do you feel this leaves both the EU and I guess the future of the euro as a currency?
With the EU, I think it is weakened because in a moment of crisis, every state looked after its own interests, I mean, including Germany. I think at one point, Germany stopped the export of masks to neighbouring Switzerland, which was quite an extreme measure. So I think it has weakened the EU. We have the eastern states, Hungary, Czech Republic, and Poland, taking their own position on refugees, migrants, and saying almost, no, we're not going any further with Western liberalism. And Italy and Spain, their economies will be in such disarray after this. They're going to act as a drain on the EU and on the Eurozone going forward. It's unlikely Italy will leave the Euro, but if it doesn't receive significant economic support over the next 18 months, when they have the next election, there is a strong possibility the right-wing populists will win. And that will put huge pressure on the euro.
And a follow-on question someone's asked regarding Europe is seeing current levels of regulation as a weakness for Europe, but is that not also helping to preserve democratic values, competition being important and data protection rights being important to protect everyone?
It's a trade-off, isn't it? I mean, if we look at where the world was before the financial crisis in terms of liberal views and democracy, it was in a far stronger place than it is now. So we have the US, which used to extol itself as being the world's leading democracy, where its president acts in a very undemocratic way in terms of the influence he exerts over their institutions and against postal voting in the next election. China has become more powerful and it doesn't extol liberal values. So yes, I can understand the argument that the EU's values are positive and for good. But unfortunately, I think in the current political climate, the EU and EU companies are going to be disadvantaged by that focus on democracy and good governance, because unfortunately, I think the tides are moving against it.
Got a few more questions to get into. Just to remind everyone, this is the last opportunity to ask Elizabeth questions from this week's three-part webinar, so please don't be shy, do submit your questions. A few more, back to the references to strongman politics. Mm-hmm. Do you feel there's evidence to suggest, or you mentioned that earlier, that those countries taking a more measured approach and rejecting populism have performed better? But one interesting point I saw mentioned before is that several of these countries, Germany, New Zealand, Taiwan, have female leaders too. So what does that tell us, and what should we make of that?
Oh, well, the obvious would be if you need a problem resolving, get a woman to do it. But no, I think women, got sweeping generalizations, isn't it? We don't have a female head of state or leader of a country who has followed a populist path. Therefore, their politics and their personality are very different from the Bolsonaros and Trumps of the world. So therefore, we would expect them to follow a more pragmatic policy course, which I think has happened. And the female leaders you mentioned, I think have performed incredibly well in a very challenging situation. Conversely, though, if we think of the Prime Minister of Australia, Scott, and his last name escapes me.
Morrison,
that's it. His politics, actually, his ideology is actually very similar to Donald Trump's, perhaps one of the most similar in the world. But his approach to this crisis has been very different to Trump's. He's actually engaged with the head of each of the states in Australia at least once a week, irrespective of their political affiliation, to discuss and decide in a united way how they're going to manage the coronavirus. So I think it's a slightly more complicated picture than that. But obviously, I'd like to say that female leaders perform very well.
I think as well, someone made the point that if it's essentially maybe there's you need to be perhaps a higher caliber to make it in the political world, in such a male-dominated world. And
that's true as well. It is hard. Also, Merkel, for example, she's a detail person, isn't she? And a lot of populists are big picture people. I mean, Boris Johnson, for example, he likes big picture. He's not a detail person. And in dealing with this crisis, you need to pay attention to detail. And populists, their personality type is not predisposed to that. Whereas the more traditional leaders, they understand the detail.
And moving, you mentioned briefly about Russia and about Putin. One thing that was quite interesting is that I think there was a report on the BBC today that Russia has the second largest number of cases reported globally. Is that level of transparency surprising, bearing in mind Russia's past, and what should that tell us?
It's surprising in some senses. I should imagine whatever they're reporting, the number is actually much higher than that, and not necessarily because they're trying to cover anything up. It'll just be around testing, for example. But I think, what does it tell us? I think it tells us Putin is being slightly more realistic, perhaps now in his handling of the crisis than he was at the start, when almost I had the impression he was trying to ignore it, pretend it wasn't happening. But conversely, they've got a high number of cases. I think the Russian mindset is slightly more stoic because of their history about it than perhaps it would be in certain other Western countries. But also the country is beginning to lift part of its lockdown now because there's so much concern about the economy and the number of Russians who are running out of food now. They're in such dire economic straits. And there seems to be support within Russia for that they'll take the risk with the virus because they need to go out to work. I also think in a number of countries, so Mexico, for example, the official figures around death rates have definitely been massaged. But how the government's bypassing that is they say, we only include someone in the figures if they tested positive for the virus. Well, if you're not testing, you don't know, do you? And that's one reason UK figures are high, is that it isn't just people who are tested. It's if you fall into a certain criteria, you're counted as having died of the virus. In a way, our figures are a little more honest.
Yeah, I did see that the UK, as an example, not to be UK-centric, I think we're one of the leaders in testing now, but I guess that's what happens when you set very ambitious targets. It kind of becomes a
never put a number on anything. As an economist will tell you, never give a number and a date by which it's got to happen. And our government's done that far too frequently.
Moving on to some other points, how concerned should we be about the wave of populism that you mentioned, and could that turn into nationalism going forward post-COVID, particularly in light of the economic devastation caused? The 1930s is cited as a previous example of this, and that didn't turn out particularly well.
I think we should be concerned about it. I mean, across much of the developing world, there were dozens and dozens of protests last year around inequality, lack of economic opportunities. And I mean, Chile was a case in point. It's actually in South America, a wealthy, relatively well-managed country, and we saw large-scale protests. So I think coming out of this, we will see more protests if the governments are seen to have that their handling of this crisis has been ineffectual, and if we move into significant recession or even a depression. I mean, in the Western world, obviously governments have taken on huge debts now to try to prevent the economy from collapsing and giving individual safety nets, which we didn't have in the 1930s. But I think it's going to be a real balancing act over the next few years to manage the transition out of this. I mean, it's only now. So France has been in lockdown for 8 weeks. The French government have dared to put forward the idea that perhaps the French could sacrifice a few days holiday this year in order to get the economy up and running. And the unions are saying no outright to that. So I think we need to find a way between governments and society where governments support the population, but the population also do something to support their country as well.
And we've got a question here someone submitted as a bit of a follow-up to that, and it's perhaps an extreme scenario, but do you see the magnitude of those potential unrests resulting in regime change in certain developing countries as well?
I mean, it's possible, isn't it? I think we'll have far more highly contested elections. I mean, we could potentially say, well, if there was regime change in Venezuela and Maduro was replaced, that could actually be a positive for the country. But I can see in certain instances we can get significant political change. We'd hope potentially democratically to avoid too much bloodshed, but yes, I think there could be regime change. One other point I would make is that the developing world will be hit perhaps more severely by the crisis in economic terms, but the tolerance of people in those countries is much higher than the tolerance of people in most Western societies. I think very much in the UK and parts of Europe, we have an entitlement culture. And a lot of developing countries, they don't have that. They have the expectation they will work very hard for any income they can get. And I think that mindset is going to be hugely important to bring countries out of this crisis. So in many emerging markets, they're starting to open up even though the virus isn't under control, because there isn't a social safety net, so workers need to go back to work. Whereas in the UK, we have the government wants schools to open up, and the schools and unions' response is, well, we're not ready. Well, you've had weeks to get ready.
Do you think there's an element, I guess as a follow-up from my side on this, do you think there's an element also perhaps in developing countries, you know, there are more other things to be mindful of than COVID-19? So, perhaps some of the deaths and some of the reporting, you know, a lot of those countries have bigger fish to fry when it comes to public health, be it potential risk of infections or their health systems.
Yeah, more people will die of poverty in many developing countries than will ever die of coronavirus. I mean, if we take Iraq and Syria are interesting cases in point, because there was attempts at lockdowns and people said, well, you've been dropping bombs on me for a decade. I'm going to work, and if I get the virus, so be it. It's better than what I've been living with, you know, during this war. So yes, the tolerance of suffering is far higher, and other diseases are far more prevalent in those countries than coronavirus. And some smaller communities in various African countries who've dealt with Ebola are dealing very effectively with coronavirus within small towns and villages, because they understand the measures they need to put in place. They don't actually need a government to tell them what to do.
Question here, do you think the culture of liberalism versus collectivism plays an important role in the pandemic, and if so, why?
Yes, because I think we're dealing in Western society, it's become very much an atomized society, and it's about individual rights. And I'm not saying that's a negative at all. Many liberal values are incredibly important. But in dealing with a pandemic and the aftermath of a pandemic, I think every individual has to work for a collective good rather than their own self-interest. And it goes back to Kennedy's speech, doesn't it, in the 60s, don't ask what your country can do for you, ask what you can do for your country. I really actually think for the world to get out of this crisis, people have to think more of what can I do to help the collective, my country, rather than what can I do purely to help myself.
Next question, how do you see Africa placed in the global context? Will China, which as we know is heavily invested in many African countries, will China help Africa to grow to support its own growth and global influence?
That would be the altruistic view. I mean, Africa, and I hate to refer to Africa, I mean, it's comprised of what, 53 different countries, but Africa has huge potential, doesn't it? It has a young population, which Western Europe is lacking, but many countries are now heavily indebted to China. And China isn't investing in Africa for altruistic reasons. It's investing in Africa because it wants the natural resources and it wants to establish supply chains which benefit China. So if African governments negotiate effective contracts for projects with China, it could be to their benefit. But my concern from what I've seen already is many African countries are getting into greater and greater debt with China, and they're not seeing the benefits from those projects. And the other concern with the projects is quite a number of them are polluting projects. They're based around coal-fired power stations. And if we're building new sources of energy, particularly on the African continent where they have solar power, where they have hydroelectric potential, it should be good for the environment as well. And I think a lot of African governments have far more leverage over China and other investors than perhaps they give themselves credit for.
Slight change of track with the next question. Do concerns about national debt miss the main point around the need for economic growth as a means of reducing debt? And how can economies be expected to grow going forward, and at what sort of rate?
Yeah, if you think of the UK national debt after the Second World War was 250% of GDP. By 1970, our national debt was down to 50% of GDP. And that was because of the pace of economic growth and increases in productivity. Now, it took us then from 1970 to 2006 to pay off the remaining 50% of our national debt because growth was so much slower. So I think we're going to see a conflict now between calls for austerity. We've seen George Osborne saying that in the last week or two. Without austerity, we can't manage the books, the debt's unsustainable. Those who will prioritise economic growth, which might be borrowing more for infrastructure and other projects, on those who will be concerned about rampant inflation, which then inflates away the national debt. So I think economic growth is key, but combined with that has to be a higher level of productivity. And the UK workforce has got one of the lowest productivity rates in Europe. And I think developing countries are far better placed than Western countries to see an increase in productivity. And also, if we see an increase in productivity because of automation, that makes more people unemployed. And I think we'll definitely see that going forward.
We've got another question around the EU. Someone's just sent this in. Could the EU's lack of proper leadership and support lead to more members upset to a level they might look at leaving the EU? And further down the line, could that lead to the breakup of the bloc? Something of a doomsday scenario, I guess.
I think the EU will continue to fragment without formally breaking up. I mean, Britain, I always think it's unfortunate, whatever your politics are, the UK voted leave at the time it did, because the EU has moved more in the direction the UK wanted it to be, or those who voted leave, since we've left. And we could have stayed and probably been the largest economy. So I think countries will remain, but I think they will ignore more EU rules, just as Hungary and Poland and the Czech Republic are. I think Italy and Spain, in terms of trying to regalvanise their economies, I think they'll ignore EU rules around that. So I think countries will remain, but they won't follow the rules. And in that sense, the EU will fragment.
Time for probably a couple more questions. I've got 3 more questions, actually. So how big an issue does culture play? And to what extent does this risk stereotyping? I guess as an example, the lockdown in the UK is seen as being lighter because it was argued that Asian markets or certain other Northern European cultures are more compliant. But to what extent do these assumptions risk becoming self-fulfilling prophecies?
I think culture plays a huge role, and the problem with talking about culture is that then certain elements will claim that, well, that's a racist statement, and then I think governments become wary about talking about cultures. But culture is hugely important, and the appetite of people in countries to take orders. So in Scandinavia and Germany and Austria, the population are very willing to follow the guidance of the government. I think it's much easier to impose a lockdown there than it seems to be in the UK with our semi-lockdown at the moment. So I think culture, is important, and the tolerance of people to observe the rules.
And the economic pressures of the pandemic have obviously been very severe. back to one of the earlier themes, can we expect to see countries that are dependent on things like tourism and the aviation industry likely to go against health advice when it comes to getting their economies going, particularly those that are politically more to the right in their leadership?
Yeah, I think that's happening already. We're seeing many developing economies opening up, even though they've got far more incidents now of new infections than we have in Western Europe. Brazil is opening up. I mean, they've never truly closed down because of Bolsonaro's politics. I think what will be will prevent that happening to too great an extent is that I think tourists from developed countries won't be willing to travel to certain holiday destinations because of the risk of infection. And it will also depend on quarantine periods. So the UK government is talking about 14 weeks quarantine coming back into the UK. That will stop many people going on holiday, because if you go away for 2 weeks and you can't go to work for another 2 weeks, you're asking for 4 weeks off work. So I think poorer countries that dependent on tourism will want to reopen. I don't think the aviation industry will be there to support them. And I don't think the tourists will come immediately.
So I think we've got 2 more questions now, got some more coming in, so it'd be nice to go through all of them. Very topical, this one. Latin America is now seen as very much being the next wave when it comes to the pandemic. What do you see as the key factors in that and the differentials in those markets? We've touched on Brazil's very populist leadership, but what's your take on Latin America and what's coming down the road with regards to that market?
Yeah, I think it is the next wave, partly because governments haven't, like Bolsonaro, haven't managed it. I mean, Mexico, they've got a much higher infection rate than official figures state, because they only include results of people who've had a COVID-19 test. They don't include all the people who haven't tested and who are ill and who have died from it. So I think we've got a high level there. In Argentina, cases are rising, but obviously the government is distracted at the moment by the potential of another sovereign default. And in small, like Ecuador has been very badly hit, but that's because it doesn't have the health infrastructure or institutions to manage a response to the crisis. So I think the lack of effective institutions is playing a key role in the ineffectiveness of Latin America's response.
And final question, I think, which is a good one to end on. To what extent do you think actual lessons will be learned from the various experiences faced, particularly based on the assumption this isn't the last ever pandemic? Or does history suggest this will be treated as a once in a generation or indeed once in a century occurrence?
Oh, I think it depends on, once again, on the personality type of the political leader. So I think Scandinavia, Germany, Austria, South Korea, Taiwan, those types of countries, New Zealand, Australia, I think they will put in place the infrastructure to deal with another pandemic, even the basic, well, not basic things, but the requirements for PPE. I think all Western countries now who can afford it will have large stocks of PPE for future outbreaks. And one of the reasons South Korea and Taiwan performed well to begin with, they had testing capacity in place because of SARS and MERS. I would have thought most developed countries now would put in place testing capacity that can be activated within a short period of time should there be another outbreak. And also, I think pharmaceutical companies, biotech companies, will actually invest billions in how to manage the next pandemic. And I think they're going to be perhaps a more reliable source of support next time than actually host governments. So I think we will learn something. Governments, depending on the government type, won't learn quite as much as perhaps they should. And when we have Trump saying what a great response America's made to the pandemic, and we all think it's shambolic. So, you know, the winners write history. But I think Sweden's approach is a very interesting one. And depending on how that's seen as playing out in 3 to 5 years' time, that could actually influence future government responses to the pandemic. Because they've taken a very different response, but they're a very responsible government. It's not a populist leader saying, just carry on as normal. It was a considered, measured response.
I think that's all for our questions. Elizabeth, are there any sort of final points or conclusions or summary you'd like to make, having spent the last 3 hours addressing these various hugely interesting themes?
I think it's very easy to be negative at the moment because we as a civilization are encountering huge challenges going forward, sort of economically and politically. But my view is every risk is also an opportunity. And for those who are brave and intrepid and also understand the nuances of investing, I think there's tremendous opportunities coming as well.
Thank you. That brings the final part of this week's three-part webinar to a close. Many thanks to Elizabeth, many thanks to Christine, who joined us on Wednesday, and to you all for tuning in. We're sorry if we didn't get around to answering all of your questions. We did do our best, but there's so much to cover in these unprecedented times. Please also listen out for further announcements regarding GTR webinars, other exciting new initiatives, including our virtual events that are coming soon, as well as, of course, our unrivaled GTR editorial coverage at www.gtreview.com. But until then, take care, and we'll see you again soon.